Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, guys, we're back. Sorry about that. We had a little technical difficulties on our end. And I think we are good to go. Chandler, if you don't mind, on the backside, I sent you the new title and thumbnail for the stream. I made a change this morning. If you could adjust that for me, that would be awesome. I appreciate it. Okay, so where were we? NASDAQ's down 3%. S&P's down 2.8. I mean, it is a bloodbath out there. Markets are not loving this. You've got S&P 500 at this point. At the time of recording this, we are about 15% off the highs. At one point, we were down 15.6. Absolute turmoil out there. I was discussing the benefits right now of a diversified portfolio. For those of you guys who said that you do have, investing portfolios, 401ks, etc. 6 months ago, it felt foolish to have anything except technology in your portfolio. Now, if you have things like gold in your portfolio, if you have things like bonds in your portfolio, if you have international stocks in your portfolio, suddenly you feel like a hero. Now, a relative hero, because most people's portfolios are down pretty good this year. But you got to remember, if you're like all technology, this is XLK, it's a tech sector ETF. You are looking at, let me just give you some context here. If your full portfolio was technology stocks, you are currently looking at a drawdown of 23%, right? So just some context is like if you have a diversified portfolio, there's a good chance you're not down 23% this year. So just something to think about, right? There is always something to put into perspective here is if you were super leveraged long the NAS right now, then yes, this is a painful experience. But for those of us who have done this crazy ride before, right, sell-offs that occur seemingly just so quickly, so precipitously, the benefits of not using leverage, the benefits of spreading out your trades and investments, right? So here's the thing is I was long gold for a good part of this year. I had a couple good winning trades on gold. I'm no longer in it, but I'm looking for an opportunity to get back in. So we've had this really big push up here. I'm looking for a pullback. Yesterday, I was looking for an entry on gold, but I was talking about just before we had the stream issue, we had the conversation going about how, there's two types of people, I would say, when it comes to what they choose to trade. Some people prefer to go for like the underperformer or the lagging things. Like you might be looking at this market and say, from a trading perspective, I want to be long the NASDAQ because I'm getting more value there, right? There's different types of traders. I'm not saying this is right or wrong, but some people are saying I'm getting better prices on the Dow Jones and the NASDAQ and the S&P. These things are down. I want to be a buyer of those. And then there's traders like myself, more momentum focused. I want to be buying the winning asset, right? Whatever's winning right now, I want to be trying to constructively trade that momentum, right? From a trading perspective, that's how I approach it. From an investing standpoint, it's actually the opposite for me. From an investing standpoint, I like to buy stuff that seem kind of forgotten, undervalued, and have potential to rebound. But from a trading perspective, right, I like to trade the relative winner. And the relative winner right now is gold, right? The gold looks attractive to me. In 2020, can I just give you an example, right? So I equated, or I compared this sell-off that we're seeing right now in markets, the trajectory is very similar to what we saw in 2020 for stocks, right? So stocks just straight nosedived in 2020. They're doing the same right now, right? NASDAQ's getting crushed. Let's look at gold during 2020, right? March 2020, all, HE double hockey sticks break out to the downside. Everything sells off, including gold. Gold saw a pretty quick sell-off. But remember, we just got done discussing how the S&P 500 did 30% down really quick in 2020. Well, gold moved lower initially, but it very quickly took the leadership role, right? Fears around recession. Oh, the Fed's going to print so much money, so much currency supply is going to get introduced. It's going to be bullish for gold. That was actually a phenomenal call if you got bullish on gold at that time. Gold was trading under 1,500 an ounce, right? What's it today? 3,100? My point is it doubled, right? It doubled. And so you may say, well, gold looks so stretched right now. Well, maybe it's so strong for a good reason. Maybe the good reason is we have so much uncertainty about what's happening. Maybe we looked at the economic heat map yesterday, which, by the way, let me not miss NFP because we have that starting in just a second. I'm going to pull up the NFP data here coming out in 1.5 minutes. Let's talk about this economic data in just a second with the context of jobs data. This is critical. If you get a jobs print that's ugly today, my opinion, look out below. I'm not making any quick action scalping decisions off of that. I'm sure there are many traders who are, but that's not my style. But I am going to watch NFP here with you guys. We've got S&P 500 just cratering here, trying to put in a low. We'll see how this all plays out. We got 1 minute to go before the NFP report. Guys, we did an extra long stream. I know we got cut off here a little bit ago. Early stream here this morning, trying to cover all this stuff. If you could do me a big favor, just as we come into the news, hit the thumbs up button on the stream. Subscribe if you're new to the channel. Hopefully I can help you out to some degree in all this market chaos. And just share something. So maybe you make one less mistake than I did in my trading journey. That's the point of my channel. So we're about to go into this key economic data point. Buckle up, be careful out there, trade safe, and we'll go ahead and do our breaking news. Okay. NFP report drops in 15 seconds. This is going to be key jobs data to show whether or not all of the recent tariff stuff has truly started to impact the labor market or not. Coming in about 5 seconds, we'll see one of the more notable pieces of information, I would say, for the current economic landscape. Let's take a look. Stocks initially higher here a little bit. 228. Okay, that's a strong jobs print. Canada came in weak. 4.2% tick up in unemployment rate. Slightly better than better than expected jobs print. That's a nice number. 4.2%, not great. Average hourly earnings came in line with expectations. Popped initially on the markets, but I think that unemployment rate at 4.2% ticking up kind of mutes the positive there. They also just revised the numbers down for last report. So I would say that this gives you kind of a mixed NFP report. That'd be my summary of NFP in a split-second decision. Let's recap this. What do we just get with jobs numbers? Well, we got 228,000 jobs created compared to a forecast at 137,000. That is a better than expected number for the NFP report. But then they revised previous reported numbers down, right? So last month's reported numbers got revised lower. So this is negative, right? This is positive. And then this is negative, right? Unemployment rate came in higher than expected. That is weak for the U.S. economy, right? So we'd say weak, strong, weak, and then we'd say neutral for average hourly earnings. So what are we looking at? We're looking at a mixed to slightly not great NFP report. This is a good jobs print though, and 4.2% is not threatening. So I'm just gonna label this a B, right? It's not a B plus, not a B minus. I'm going to give this NFP report a B. It's not an F. It's not an A. It's a B, in my opinion. Let's take a look. Market reaction, again, pretty muted. Not going to be, in my personal opinion, a massive save the day event. Had you seen unemployment rates stay steady and revisions not happen, and this number come in, I'd say that could actually be a nice kind of cushion to the fall that we're having today. But I don't know that this really offers you much resolve in the form of a safety net here. So how's this economic data looking after all said and done? Well, you're going to have, once this data updates within the EdgeFinder, this is going to go blue, but then this is going to go, where's our unemployment rate? This is going to go stay red, right? So red, blue, not going to really change too much. Wage growth coming in lines with expectations. So the overall summary on the economic heat map is going to kind of remain US dollar bearishness still seems to be the norm right now. Let's take a look at the dollar just in reaction to this. You've got dollar index slightly lower. That's telling you, again, not a super promising report. Gold kind of mixed here, and we have oil prices continuing to be on the decline. Slight modest bounce back in response to this NFP report. Pretty underwhelming, but yeah, I mean, the thing is, again, you got to remember what's taking center focus to this market: tariffs. And it's just the, as Trump puts it, it's the most beautiful word in the dictionary. I'm sure that there's some controversy around that, as with everything, but yeah, no, it's an interesting time, and we saw retaliations from China. Tariff war, trade war seems to be kind of back in full swing. So we got Trump 2.0, we got possibly tariff or trade war 2.0 beginning to take place here in the 2025 era. S&P 500 is trying to bounce. I mean, at one point we were down, 3% on the day or so. Oh my gosh, yeah, 3.6. NASDAQ was down at 1.4% on the day, 4.5 even. Real sharp bounce. VIX giving back a little bit of that volatility, right? Very kind of normal after an NFP report to give back some expectations in terms of volatility, simply because the cat's out of the bag. News is now behind us. One of the potential market movers being NFP, right? But no, I would say at least right now, NFP did not give us any kind of massive consolation to say, hey, this market is gonna, just rip higher from here. I would love to see that, but I really think what this market needs in order to stop the bleeding, if you will, would be conversations to begin between Trump and global trade partners, right? I said this in my video yesterday, I don't think you get a material stopping of the selling until there's a phone call that went really well, right? And trying to call when that's going to be is that's hard, right? So for me personally, this market is in sell mode. It is feeling very much like a COVID pandemic kind of breakout, where you just don't know what's the next, big piece of headline news is going to come out with. And that's been the theme for the last few weeks. But look, Chinese retaliation, if other places follow suit to China, you could be looking at global recession fears becoming much larger, right? I mean, the betting market, I think, has the probabilities of a recession now somewhere at like 45 to 50% chance of a recession, and they probably just went up higher with China's reaction. Still bullish on gold, Nick? Definitely bullish on gold. I think it has relative strength in comparison to other charts. I mean, it's outperforming silver. I mean, look at silver today getting killed. Copper down 5%. That is a good signal. This and oil are a good signal that you actually have. Not only do you have, true market selling in terms of risk sentiment, this is telling you, copper and oil today are telling you, oh, if we don't get a quick change to this kind of trade war dynamic that we're seeing, recession is a possibility. So yeah, it's crazy. It's a crazy time. So what am I doing in all this? Well, I'll tell you what I'm doing in this. I am sticking to the system. System has been very good to me overall this year. You can see NASDAQ, S&P, those things are not on the list right now. What's on the list? Bonds and gold, euro, pound, CAD Swiss. These are trades I like, right? If we take a look at the top setups, all of these have been mostly pretty good ideas this year, right? Gold has been very bullish in the EdgeFinder pretty much all year. It's been a phenomenal call. I've made some good money trading gold to the long side this year so far. Euro and pound have also been exceptional calls. Let's check in on the euro because I'm currently still long that one. Popped up on the EdgeFinder. And I am currently, as I said, still long euro dollar. Looking really good so far. I do think we have potential, if this dollar wants to keep rolling over, to give us this move up to this key resistance, 1.12. I'm going to probably lock in profit if we go there, right? So I'm sitting in a profitable position here. Yesterday, I closed out of Kiwi dollar longs. I took this from this zone. Wow, guys. Wait a second. I have not seen what happened to Kiwi dollar. Did I miss something? That must have been in reaction to Chinese retaliatory tariffs. That's my guess, right? Wow. Okay, I feel like I lucked out on this one. Guys, I went long Kiwi dollar here, closed it right there. That's a count my blessings moment right there. My goodness. Yeah, so I'm out of, I'm thankfully out of this Kiwi dollar position. I took profits on that one. Euro dollar holding up much better here. I'm still in euro dollar. I took profits on Kiwi dollar. Gonna watch this one because again, it's an interesting sell-off here. We'll see if we can get back down to the lows, at which point maybe I'll establish another position on this. I don't know that I would call it full luck, but I will take my my blessings where I can. Like I said, I went long Kiwi dollar over here, and then that ended up being, let's see, hold on. Let me just brag for a second. Hold on. Okay, brag incoming. Here it is. Yep. So Kiwi dollar, 121 pip winner. I took the trade right at support. Targets on the next level higher. That was like the cleanest, simplest trade. And I'm very glad that I got closed out when I did because, again, the complete reversal. By the way, if you guys want access to the VIP Discord, it is also 40% off for a limited time during all this chaos. Great time to come join the action. Forex has been popping off. I've been trading a lot of Forex here recently because, again, indices not really trading the way I wanted them to. And so I've just kind of moved on. I've been focusing on other things, and that's been so far the right call. If you're not in the VIP group and would like to be, here's how you can get access for 40% off. Send us a direct message on our website right now. We got two wonderful people in the office ready to help you out. If you have any questions about getting a membership with us, come trade alongside us. It is a time to trade this volatility. There is opportunity out there. If you are willing and able to stay patient and consistent and diligent, there's some great opportunities out there. We're going to drop a link here. There it is. Boom. Send us a direct message. We'll give you 40% off any of our membership options today. So don't miss that opportunity. If you want to come trade with us, it's a good time to do that. Also, while I'm at it, EdgeFinder is also 40% off. It's our biggest sale of the year on the EdgeFinder, and perfect timing with all of this craziness. Again, if you're trading without software, if you're trading without data to help you spot trends within all this noise, like I said, I couldn't leave home without the EdgeFinder at this point. And I genuinely mean that. Like, especially during a time like this, where headlines are going to be screaming in your face and the market volatility is so high and everything is so violent out there, and it's a crazy time to be trading. You cannot, in my personal opinion, you cannot be trading without clarity, without data sets in front of you that help you better screen everything that's in front of you. Because again, there's so much noise. If you're trying to read articles to keep up with fundamental analysis, again, I think that's a really dangerous way to go because articles are full of bias. You know what the EdgeFinder's exceptional at? Just data, right? Don't give me bias. Don't give me your pro-Trump or anti-Trump indoctrination within the news. I just want the data, right? I want to look at NFP reports. I want to look at GDP numbers. I want to look at what institutional money's doing. Are they buying or selling? We looked at this last week. This is another reason, guys, I did not go buying more indices. Look, the institutional data warned us big time. COT data showed us net selling was big time for NASDAQ, S&P, and Dow Jones. So again, I think we have to be adaptable. You guys might be hearing me say, you might be like, this dude, Nick, was literally bullish on indices like a week and a half ago. And you'd be right. But I'm not above when it comes to, I'm here to, at the end of the day, I love trading, I love investing, but I'm also here to make money. And at the end of the day, as a trader, as an investor, I have to call what I'm seeing. And that's another thing that the EdgeFinder does so exceptionally well, is it helps me to keep my bias out of it, right? The EdgeFinder just looked at that COT data and like a robot, like a machine with no emotions, it said, oh, yeah, no, we had to be careful with the COT data, right? The COT data is showing a huge amount of selling. Okay, factor that into the score. No more indices. One of the best, I didn't take a trade, and not taking that trade probably was the most positive impacting decision that I've made in my trading all year long, right? So something to think about. Trade systematically. You have to have data, because data doesn't give you political bias. It doesn't give you fear headlines, right? Data just gives you the data. So really important. So take advantage. Like I said, EdgeFinder is 45% off for people who are watching the stream right now. We'll do an extra 5% if you are watching with us right now. Send us a direct message using the link that we just dropped in the chat to speak directly with our support team. Alternatively, you can go to a1trading.com. That's a1trading.com to check out our tools, to explore the full list of features. And if you have questions, you can speak with us using the live chat button in the bottom right. Okay, so Bulent, good to see you, my friend. Thank you for, as always, being a channel member. Appreciate you on that. Nick, check gold. It's coming to our area again. It moves so fast. Is it really? No way it moved that fast. I mean, Bulent, you're kind of pointing it out, kind of calling it out here. Like I said, I'm interested in this area of support. Now, I'm going to jump ahead of myself, and I'm going to sandbag my position here in case I'm wrong, because that's what any good, YouTube guru does, is they sandbag in case they're wrong, right? No, I'm just kidding. I will always tell you guys when I'm right or wrong about something. I don't care, because at the end of the day, I'm not going to change what I do based on YouTube comments. I'm not going to let it, bother me. It's in the end of the day, I'm here to trade, and I'm just going to do my system. So when I say that, what I'm referring to is, okay, I like this gold idea. I will stop out if it breaks the 50% retracement, and I'll probably try a second time if we get a push down to the 61.8% retracement, but just a little bit below that where you have this support. I'm thinking 29.50. Both of these trades, as long as we still have EdgeFinder confirmation, are trades that I'm very likely to take with a small risk. I'm not going all in, right? No all in leverage. It's a common mistake that people make. Again, a lot of people watch my videos and my Discord messages, and I just want to say something, right? So when I have an idea, I say it as much as I possibly can. I don't share ideas for people to copy and paste what I'm doing. That's not really even what the point of our service is, right? The point of our VIP membership, the point of this YouTube channel, is for me to share my opinions, my experience, my what I'm looking at, the research that I'm doing in markets. But it's absolutely not for people to just copy and paste what I'm doing. That being said, people still choose to do what people choose to do. Even with the disclaimers, even with my warnings, people do that. Where people mess it up, though, is that no matter who you could copy Warren Buffett. The thing is, people mess it up because they go all in, right? That's what people do over and over. If you have a small account, you probably shouldn't even be trading gold, because the minimum contract size for like NAS 100, XAU, USD, if you're trading on a Forex CFD brokerage, is way too big for small accounts. So you basically over leverage massively. And if one trade goes wrong, you're toast. That's not a sustainable way to trade. That's going to leave you broke, right? You have to have a good size trading account if you're going to trade gold on a CFD brokerage, or you can trade it through like GLD if you're in the US on a small account stock brokerage. That's a great way to trade gold without putting a ton of capital. Or you can trade futures, right? There's all different options, but CFDs like XAU, USD, if you're trading that, you have to have a good size trading account, because again, a stop loss like this, right? 1.6% distance, that in pip form may be way too big for many traders. But again, that just means your account size is probably too small to be trading gold with a proper, risk approach. Anyways, those are a couple ideas that I like on gold. I'm going to keep watching for them. Let's see if we can get a flush lower. Bulent, thanks for pointing that out. And again, thank you again for being a channel member. Up next, guys, we've got Kenzo coming on the stream. He's going to be joining us for some conversations here about fundamentals and about what is happening with this major market correction that we are now seeing. It is on the borderline, guys, of going from correction to actually entering into bear market territory. S&P is down 15.7%. Technically, a 20% or greater downside move is considered a bear market, or if you want to get dramatic with it, a technical crash. Right? NASDAQ is already there, or it was. We're now down only 19%. But from the highs to the lows here, we're at one point down more than 20%. That's a technical bear market. If we close back below that, it's an ugly sign out there. Anyways, up next, we got Kenzo joining the call. Stay tuned. We launched the EdgeFinder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the EdgeFinder is producing now. The EdgeFinder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name EdgeFinder. So if you're not already using the EdgeFinder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the EdgeFinder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the EdgeFinder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the EdgeFinder at the super discounted prices. Thanks for watching. And now back. Kenzo, good to see you again. Welcome back to the live stream.
Yeah, I'm great, man. I'm great. So let's see what's really happening.
quite a bit has happened. It's been a chaotic couple weeks, and my goodness, we have a lot to cover, both on a price action perspective and on a news reaction. I guess the big headline here this morning is, of course, that well, we saw the Trump announcements of tariffs, and in retaliation, China has slapped back the same tariff on U.S. imported goods. We see the market's reaction to this is very ugly. We see basically, Kenzo, there was this, okay, here comes the big news event where Trump announces the tariffs. And then we all stood and looked at each other like, what are the other countries going to do in response? Well, China is, of course, a rival to the United States. So they quickly took kind of a aggressive response to the tariffs, and we see markets lower. Do you think this has room to keep going down? What are your thoughts on all this?
Yeah, I think it's on at the moment it's a bit confusing, little bit. But if maybe we can check history, not really far, the time US and China had some trade tensions, we started to see these indices going like seriously going down. And I think even last week, I think it's this week, we did talk about that actually mostly when we have trade wars and stuff like this, because actually tariffs is like trade war. So mostly the stock market will suffer. But what Trump did, it's like extra. I think it's way, way extra, because doing that at the same time, doing like to every country, you can do it for some country and keep other ones as your friends. But if you do like everything, it's like we no longer have friends. It's just something like that. So it's seriously bad. And some countries, they also want to show their boldness, or obviously they can't just be submissive. They will actually try to retaliate, especially like China, maybe India or the other ones. Also, I saw Europe, they also preparing some. So that makes it worse because that creates panic, even though maybe at the moment we don't really get that bad effect currently, but just that risk, or let's say those emotions that we see going on at the moment, they're not looking good at all. So we might have a smaller recovery here and there, but it seems like everyone is on a panic mode, and unfortunately.
Yeah, and it's again, we see stock markets around the world here today really not loving this. And you got to think, even if you're not the U.S. or China, we see the DAX down, we see the Japanese stock market, the Nikkei down, Chinese stocks, of course. Like you've got all these stocks selling off, these indices selling off, because again, this seems to be a global conflict now. It's almost like a modern day, kind of announcement of quote unquote war, if you think about it, right? It's like um, in today's world, it's different times, right? A lot of wars, quote unquote, are fought through proxies, but they're also fought economically. They're fought through trade. They're fought through all these sorts of things. So in the last 100 years, we've had this dramatic move towards globalization, and now suddenly you have this push towards kind of the opposite, right? Everybody tariffing one another. So it's really hard to say how that all ends out. A good scenario, I think, would happen, good for in the sense that uh, things could kind of progress and move positively from here, would be if negotiations began to happen between the U.S. and other places, and tariffs started getting pulled off on both sides, right? If the U.S. is like, okay, well, we'll exempt you if you do this, and then they both kind of like meet in the middle and compromise, those could be seriously positive things. But what we see again from the initial response from China is, okay, if you do that to us, we're just going to do it back. And that's kind of to be fair to the administration as well. That's kind of what they're doing. They're saying, well, you've been tariffing us, we're just going to tariff you back. And now they're saying, well, we're tariffing you in addition again. So we're seeing some interesting escalation as the point, rather than resolutions, right? So escalation versus resolution is really what we're thinking about here. And we see again, the Nasdaq obviously hates further conflict, and it's weird because again, this is almost like, Kenzo, it's like an announcement of a war type market move. You get this all of a sudden drastic shoot lower. COVID was also kind of like that. It's this big, ginormous uncertainty, and we don't know where it ends. Just like a major, war announcement. It's pretty crazy stuff.
Yes, and unfortunately, you're right about that. Unfortunately, there will be countries where they will actually try to sit on the table to negotiate the tariff thing and stuff like that. But unfortunately, those countries, they might be too small to change what's really happening, unfortunately. So the likes of China, European Union, and the other ones, they might be aggressive also. But smaller countries, they will think, oh, they will actually see that, oh, this is bad. So let's try to meet uh, actually with the US, and they might resolve that. I saw Trump said, you know what, this will force other countries to sit down to sit down on the table at the table. So which is good, but it seems like those countries, they won't be those major economies. And even though if they say Botswana, or let's say South Africa, maybe for example, that won't change much, you see, because when we check their trade, uh, the imports and exports, they're not really much. Maybe it's less than 2%. So it's not gonna change much on the economy. So, but when we talk about like China, that is gonna be something else. That's why maybe we see uh, Nasdaq's, US status, because if you check US, people who trade, let's say, or let's say who invest into these companies like Apple, Microsoft, they're not only from the US. Chinese business guys, European Union, Canada, all over the world, they also invest in that. And I think that's what they see, and things might get worse, unfortunately.
You know what's
So I
uh,
I I res- at the moment it's fine because the market is selling a little bit. When we combine this with maybe within 2 days, 3 days, yes, it's a bigger percentage. But within a day, it's much better because it's 2-3%. But I think if another country retaliate, we might start to see the nines, the seven, negative negative on the percentage there. Yesterday, yes, it was a bigger number, but it seems like today it's not going to be like yesterday.
Well, you mentioned Apple, Kenzo, and I just wanted to for whether you trade Apple or individual stocks at all, this is just a story to kind of showcase what you're talking about. So China and Thailand, by the way, Apple manufactures a lot of stuff there, right? So this is what's kind of crazy about this is like, and let's say an Apple iPhone is $1,000 in the United States, $1,000. With the tariffs, I heard a discussion about this saying that a potential impact to a $1,000 iPhone could be going up to somewhere between 1,200 and 1,500. And for many consumers, that is a substantial difference, right? 1,000 to 1,500. That really changes the affordability of Apple iPhones, right? Because again, if there is a lot of manufacturing that Apple does in these places, which many companies in the United States, they do their manufacturing in other places, right? So the thought process being, if you can't just say, oh, okay, we're going to do business in the US and then have a factory there. Like factories take years to build. So the trouble for Apple is that, okay, they still have to do these prices. So they have to bring $1,500 iPhones or $1,200 iPhones to the United States. So this is the challenge for these companies. Now, again, there are potential benefits to tariffs. I know it's hard to think that way when the market's selling off like that. There are some benefits. So I don't want to sound completely, negative towards tariffs. Trump is all a big fan of the idea of like how much revenue that's going to produce for the United States and all this and infrastructure build outs. But the point is, in the short run, stocks are hating this because, again, this really challenges. I heard a lot of people talking about how Apple itself could have some serious, blow up potential, some real problems if, the consumers already kind of felt the price hikes in recent years and priced out a lot of consumers to certain goods. $1,500 iPhones, could be a challenge. Now, I don't want to sound like a doomsdayer because, Apple's a smart company. What they might do is they might say, well, we'll make it so that payment plans can be extended at further length. So instead of paying it off in 12 months, maybe you can pay it off in like 36 or something and make the monthly payments much lower, whatever. Point is, higher prices are almost a certainty. The question is whether or not that causes sustained inflation or not.
Yes, and these big companies sometimes, they can actually absorb some of the tariff, but they can't actually absorb the whole percentage. Let's say maybe it's going to be 50%. They might say, okay, we will lower our profits margin. Maybe the consumer will pay only 20%. Still, that is not really going to be enough for the company. They can't absorb everything. And when we talk about, let's say 1,500 that you're talking about there, maybe we're talking about iPhone that is made in India or China. But if maybe it's something that, let's say maybe 3 years to come or 5 years to come, maybe it's built in the US, that might triple because now the employment or the wage in the US is going to be higher. Those countries, for those people who are doing the job, it's very cheaper. So in the US, it's going to be a different story. So it means they have to pay for the metals. I mean, still, the percentage is still higher, even if they can't pay for everything, but they have to, the materials that they actually, whether maybe they don't really take different parts from different countries, but just for metals or steel, already there's a tariff on that. There's countries which, let's say, yes, Samsung has to supply screens or something like that. Already there is a tariff on that. So I don't think this is going to age well. I think maybe we'll see a reversal. Maybe they will have some meetings and stuff like that just to make these countries to submit and say, you know what, let's just negotiate. Unlike the way we go in it, I don't think maybe it's gonna be much. I think maybe if they kept 10% overall and not this extra 25, whatever the amounts, because they're crazy. They're like way too big. Yeah, maybe they might survive, but not now. It's like this can be very bad for a very long time before maybe things start to change.
It's actually a really good point, Kenzo. I hadn't really thought about that, but what you expressed there that I think is wise is like, okay, even if they bring it to the United States, American workers are way more costly than Thai workers or Chinese workforce. Is way more affordable, uh, and that impacts the final cost of the product. Right, the price of iPhones is made greater or less than, or it goes up or down based on the cost of doing the business to create the iPhones. If we bring all those jobs to the United States, but American workers want way more pay than, Thai workers or Chinese workers, that's a great point. That input cost may actually be the same as if we imported those goods from another country and paid the tariffs. So I don't know. Of course, there has been conversations for Apple with Tim Cook and Donald Trump about some plans to do infrastructure moving to the United States. We'll see. But again, all that stuff takes time. It's a lot of uncertainty out there with everything that's going on. You got small caps down 3%, Dow Jones down 2%, NASDAQ down 2.2, bouncing a little bit here, but what you said there too, Kenzo, at the end about resolutions, right? I actually think, this is my personal opinion, best case scenario right now would be if, what the Trump administration actually does is seeks out fair trade, in the sense that I think it's fair to say, I think most countries are probably willing to negotiate to a degree on the trade, knowing that the U.S. consumer is a very valuable asset to the globe, to countries all over the world. It's a very valuable asset. We're the wealthiest nation. We have major spending that we do. There's a true value to doing business with U.S. stuff, but there's a difference, I think, if there's like unconditional, sweeping, massive tariffs. If that sticks, like we saw, if that stays the case and worsens, and there's no resolution, that's a very uncertain and wobbly path. If there's negotiations, if all of this is still a negotiation tactic by Trump and team, that would be really interesting, right? Then there could be some resolutions. There could be some things that ultimately are actually favorable for the U.S. If trade negotiations take place and other countries come to the table and cede something to the United States, that actually could be net positive, I think. Yeah, go ahead.
Yeah, I think you're right. I was also thinking about that. I think most of the time when we see this type of sell-offs, the administration mostly will try to take over and try to solve the issue as quick before it gets out of hand. I think maybe behind the scenes they are trying to do something.
Yeah,
maybe they will try to find few countries, maybe tomorrow because it's weekend, so that the market doesn't really go crazy. Just to say, okay, we will, as you saw, they did not really add Canada and Mexico yesterday. They might come with a different list and say, okay, maybe they're willing to negotiate, then we're gonna pause with the tariff. I think that is gonna help, especially the stock market. But if they're gonna continue like this, I think it's gonna be bad, man, because the thing is, tariffs, they just kicked in already. It means something that you were paying, you have to pay extra price. And the problem with these tariffs or the prices or consumer prices is people don't just get a raise every day at work. So for your salary to catch up with the inflation, it's gonna take a while. So companies, they won't just do the increase overnight.
Yep.
And now the prices are higher. So I think that is going to seriously have a bad effect, not only in the US, I think almost everywhere.
Yeah, no, it's great points, Kenzo. I mean, that's the name of the game right here. The uncertainty that we are facing is, of course, what happens next with the tariffs? Do countries come to the table, or do countries ban against the United States? That is the next thing. And here's my best guess right now. I think the rivals of the US, of course, like China, are going to be the quickest ones to take up arms and to try and fight. I think other countries like the European Union and maybe Japan and actually Trump made mention to some senior official, I guess, that had unfortunately passed away in Japan. He said the tariff conversation was actually going positively already. So I heard that in his speech. So I don't know, maybe what we see is more of the allies of the United States finding ways to, hey, let's negotiate. And then maybe more of the rivals, like we're back to a 2018 vibe where it was China kind of and the US really going head to head. So I don't know. It's crazy, but I think that the ripping up everything and trying to move every piece of manufacturing back to the United States, the market doesn't like that, because that's a long term. Maybe it works, maybe it doesn't change, as opposed to negotiations where we could get trade a little bit more balanced in the here and now and keep things okay. And I think that the administrations must know this on both sides, US and allies. They must know what we're talking about. They must say, look, if we can negotiate something, we can fix this and work on this. But if we try and do this thing where it's like sweeping massive tariffs and that just completely kills the trade between our nations, trade is a positive thing for both sides. So it's a crazy time, Kenzo. I don't know that I was saying this earlier, but this feels like the same kind of sell-off that we saw in the COVID pandemic. Very, very fast, very rapid decline.
Yeah, and I think it might continue. And the worst thing is, this world is not really fair sometimes, because whatever Trump did or done, actually, it's not like, if you can look it in a different angle, it's not really wrong, because when you check, US doesn't really, let's say US product, they get this higher tariff. Let's say maybe, for example, in Japan, about Toyota, about Honda, all these cars or vehicles of these brands, but the popularity of US vehicles in those countries, it's very less, because the tariff was already higher. You see. So the thing is, they left that gap for a very long time, and it sounded like it's normal. If maybe there is US product, we charge it higher so that we can compete with local manufacturers and stuff like that. But at the end of the day, whatever Trump is trying to do, it's actually fair, because if you checked the numbers or the table, it's been like that. They charge US products like way, or companies, like the tariff is crazy. And mostly when they do the same to, let's say, those countries, once they export, they don't really get that higher tariff. If you checked, maybe before Trump became the president, China was, I think it was even almost free when they export their goods to US. But when they do the same, when US do the same to China, all the products, yes, they had this higher tariff, and it was not really balancing very well. Maybe US consumers never noticed that, because maybe the currency value, it was a bit higher, but it was not really fair. Unfortunately, the market already used to that. If you try to change that, it seems to be wrong. I think the way Trump did, it was actually using the aggressive way, I think he actually used it in an aggressive way, but he wasn't wrong. It's just that the way he done it, the market already used to that type of ripping. So US used to that, unfortunately.
Yeah, no, it's I mean, to your point, the dynamics of trade, this is a topic that, of course, Kenzo, everybody gets so upset about because it's very political. But I do think that there's a fair point to be made that the trade dynamics with the United States, there's a reason to be like, hey, we should probably work on these. I think where most people disagree, and that's what I always try and do on my channel, is just think logically about like where most people are kind of like, yeah, I can see that, of course, the extremes are where people get into, the really political takes, right? People are like, oh, we need to reset trade completely. US doesn't need anybody. And I think that that's a more extremist view, as opposed to,
mm,
the other side where it's like, no, US should just accept this and they should just deal with it. I mean, there's a powerful asset in the US consumer. We are the most, we are the crown jewel in terms of money spending in the in the world. So there's a fair point to be made that, like, hey, if you're accessing the US consumer pretty much for free and you're making us pay a ton of money to send goods to your country, there's probably fair
mm.
conversations that could be had. But completely nullifying the rest of the globe and saying, well, your affordable workforce allows us to make great products, or to bring like high tech companies like Apple to the forefront of the world. Like there's give and take, and I think I've stayed true to this theory and I've been early to this idea, but I do think that there will be resolution because, again, it's the make or break between a global recession or not having one, right? Is if there's negotiations,
Mm, mm.
probably we get away with less damage. And if there's no concessions of both sides, and that takes two to tango, right? If there's nothing, no compromises, then there's a very strong chance that we enter into a pretty ugly recession globally.
Yeah, I think already at the moment they start to talk about it, and the more they start to repeat recession left and right, that also will create another panic in the market. And at the moment we'll be glued to breaking news, which is not really good, especially for investors. So I think the only thing that is good, I thought maybe I did not really see the update on China. I thought maybe they were going to go on the table because already they were not fair. Even though the way Trump does things, it seems to be aggressive, but
Mhm.
already they were not really fair that much. So I
The
thought maybe they were
Just so
going
you
to
know,
go on the
Kenzo, in
table.
case, just to say this, China added in response 34% retaliatory tariffs this morning to the US. So it was they matched the same number right back to the US. Just wanted to say that because you mentioned that.
Yeah, that's crazy. That's crazy. I don't think at the moment the problem is already these bigger economies, they already diversified these companies, Apple, whatever, Nike, on a different country, which was good before. But I don't think China was supposed to do that. Unfortunately, this is politics because if you actually blocking or adding custom tax or tariff on the products that come in from the US for years, and when they do the same thing, you try or retaliate. I don't think it's good. It might look good just because maybe you want to look strong, unfortunately, but that just creates this chaos in the market, and we don't really want that, unfortunately. So,
Yep.
for example, if we can just give the example, TikTok,
Hmm.
it's a Chinese company, just only TikTok, maybe, and
Hmm.
the other ones. But if you go to China, you can't even get Facebook, not even WhatsApp.
Yeah.
And it's been like that for quite some time. But it's funny when you see these politicians argue and say, "Oh, don't ban TikTok, 1, 2, 3." But you can't find the same apps in China. You see,
Mhm.
I also like Chinese products and stuff like that. But when you check it from, if you are neutral, you will start to see that no, but it doesn't really make sense. There are a lot of stuff which are not really allowed in China, but
Yeah.
Chinese products has to be allowed in a different country. That doesn't really make sense, you see. So it's the
So
same as tariffs.
yeah, and I also want to just
Yes, you
respond
can
to
go.
this, Kenzo, to this concept. There are other markets besides the US, Asia's massive market. I saw Royal Trade's concept. And these are fair points. Like, I just want to bring these up. China alone is bigger market than the US, which is not true. But what are you talking about now? Add Singapore, Malaysia, Vietnam, and India, and you have 3 times bigger market than US. So here's the thing, right? I run a small business. And if I were to
Mm,
exclude, let's just say that I completely took out Asia from the sales of my business, right? We run a software company. That would really hurt our business. And let's say for other
mm,
countries, China, let's say US business is just cut off. Well, you just cut out a huge portion of their business, right? So we need each other. The point is the US is the cream of the crop market. It's the most wealthy, highest spending consumer in the world, right? So countries like China love to sell goods to the United States because we're a huge single-handed country portion of revenue that goes to companies there, and vice versa. The US is able to manufacturing using China. The point is, you can't just say, oh yeah, no, we don't need the US, or the US can't just say, oh, we don't need China. Like it's a global trade system. Anybody who's not participating in the exchange is cutting themselves short of potential revenue that they could be taking advantage of. So cutting out an entire section, you might say, oh yeah, no, we don't need the US world doesn't need US. That's foolish, right? Because you're just cutting out 33% or whatever of North America, whatever it is, huge chunk of the consumer. And I actually think that in terms of consumer spending, it's actually much larger than just this GDP. Like US customers spend like crazy. US consumerism is out of control compared to other places. So that's the point, is we need each other, right? The US is a massive market. And to say, oh yeah, no, we don't need US spending is foolish. Just like US would be foolish to say, oh, we don't need these countries for their supply chains and their affordable workforces for US companies to produce technology. So something to think about. Kenzo, we got to run for our next stream segment here. I want to thank you again. Really, really appreciated your thoughts here today during this chaotic market sell-off. We appreciate you as always for coming on for Fundamental Fridays. Everybody who enjoyed commentary from Kenzo, please take a second, go subscribe. Here's some free value to help you out during all this chaos. You can check out Extra Hot Forex on YouTube to keep up to date with ideas being shared by Kenzo there. Kenzo, thank you very much for coming on the stream today.
Thank you very much, man, and also your viewers.
All right, thanks, Kenzo. Again, yeah, just wanted to make that quick point because, again, there's a lot of takes, a lot of strong opinions on this, but I think that global trade, the way trade works, trade is net beneficial for both sides if the balance is okay. So I think that's what the ultimate goal is. We'll see how it all pans out. Markets are selling off crazy here today, down 2.5% for NAS, 2.2% for S&P. Up next, we got Forex James helping to guide us through this chaos. He'll be taking a look at some setups and ideas and keeping you guys up to date with everything that has been going on with this market. Just a quick reminder before I go, EdgeFinder 45% off sale is ending soon. Get the biggest discount on the EdgeFinder all year long. We do not go lower than this. If you've been thinking about picking up a copy, here's your chance. Use the link in the description now. Or in the chat to speak directly to our support team. They can get you that extra 5% additional discount if you're watching with us live here on the stream. Click that link, send us a direct message. Up next, you got Forex James. Stay tuned. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. How's everyone doing? Now, who has been margin called and who's not is the real question. These markets have been very, very brutal. But what can you do? You can't do anything. We've got to either sit here and watch, or you can try and trade it. Igor, Chris, I assume will be on after me. He normally is. It's normally me, then Chris is the normal pattern. So to be quite honest with you, I'm not looking to trade anything right now. I'm watching silver because it's got a very nice technical setup. But am I going to take it? 99% chance I'm not. I don't want to hold trades over the weekend because what could happen? We've already had China reply and apply tariffs back onto the US, which we saw the stock indexes take a huge hit on the back of that news. So over the weekend, it's possible we'll hear more from other countries. So for example, let's say we buy here with the idea, obviously the market's going to go up. Something happens. It could be, someone comes out and says something. We could open with a gap somewhere, or we could just open and dump off the cliff. I don't know. I don't want to be exposed to that. I don't want to risk it, so I'm just not being involved. The markets right now for me are just not tradable. Well, hold on. I placed a short position on Swiss yen. So again, anyone that watches my segments or knows anything about me will know that Swiss yen's been on my radar for a long time. I've made a bit of money here and there, but I've now started positioning for a bit more of a long-term idea. So for the next maybe year, 2 years. Very, very small position here, just off this daily 200 moving average, a very small resistance, nothing too crazy. But the recent volatility provided a really nice point where I can say, okay, I can enter now, very small position. I don't mind this being the initial entry rather than it being down in this area towards 165, 166. So yeah, pretty happy with that. Other than that, I've got a very, very small position, actually very small, 0.02 lots, crazy amounts of money on the line here. Just shorting the S&P, nothing crazy, no real fundamental reason, just following the trend, just looking to capitalize on some short-term momentum. That's about it. Other than that, I'm pretty much flat. I've got nothing else going on. So yeah, that's it. I mean, I heard Nick, I'm sure Nick's talked to you about tariffs. I've also made a video breaking down the tariffs as well. There's not that much more to discuss, to be quite honest with you. The only development is China, which I've already mentioned. I think Nick also mentioned it as well. But yeah, that's pretty much it. So yeah, the main concern for me now is just what's going to happen over the weekend. The US 100 or the S&P or the SPX, whatever you want to call it. In fact, all of the stock indexes have had massive moves to the downside. The DAX, the FTSE, the S&P, NASDAQ, Dow. And this isn't financial advice. Please don't take it that way. But I think this is one of those periods where buying into it for a long-term hold. So if you've got an investment account or you're happy to start dollar cost averaging in on obviously very small positions, I think it could pay off massively within the next couple of years. And again, that's not financial advice. It's just what I'm doing. So on my investment account, I've been consistently every 3 days, I've just been adding into positions, invest, just buying at discounts. And that's what I'm probably going to do on a CFD account as well at some point. But I need to be a bit more pinpoint of entries by doing that, because obviously you need stop losses and position management. How to trade this day? Difficult. Larry, to be honest with you, my friend, I think this is one of those days where it's best to sort of just sit out or follow momentum with very, very low risk. I just don't see any opportunity, to be quite honest with you. There's a few technical things, you could say, again, the S&P 500 is at kind of a level here. We've got silver, it's got quite a nice technical entry. We've got gold that on the H4 here could be coming down to a nice technical entry as well. But I'll be honest, the markets at the moment aren't moving based on tariff news. So if you look at the dollar, we had a really strong NFP, actually quite a big beat or a big overperformance, but then unemployment came out slightly higher. So that wasn't great, but it was very muted. And I think that's mainly due to the fact no one cares. People aren't really looking at the day-to-day data. The markets at the moment are moving based on tariffs and risk-off sentiment. So I think that was pretty much just swept under the rug quite quickly. And we don't really have anything for the rest of the day. We do have Powell talking tonight. I'll be honest, I wouldn't, I say tonight, actually, it's within the next, when is this, 2 hours? But yeah, I don't think there'll be anything of interest there. I don't think it's a tradable event. I don't think we'll really see anything other than maybe we're data dependent, blah, 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 same old, same old. JP Morgan, was it? I don't know if it was JP Morgan or Goldman Sachs have completely wiped out their idea of US rate cuts or Fed rate cuts this year. I think it was Goldman Sachs basically now thinking that we're not going to have a rate cut by the US. But we'll see. We'll remain data dependent. Okay. AUD USD buys is a good 1 year position. I mean, if you've got the cojones, I think there's some really good opportunities to hold positions now, but most people aren't going to do that. Thomas wants pound dollar. I would assume we're going to continue to the upside on dollar crosses. I think the sentiment around the dollar is pretty dismal. I spoke about this briefly the other day or on one of my videos, but I was asked, why is the dollar not being a safe haven? Because in typical risk-off markets, you'd see gold up, you'd see the Swiss up, you'd see the Swiss and the yen up, which they are. You'd see the euro down. Why are we in risk-off and those markets aren't moving as they typically would? Well, first of all, the dollar's not up on risk off because the dollar is the reason the markets are risk off. So if you're looking to protect capital, you're not going to put that capital into where that risk off sentiment is developed from. So the dollar is a no-go zone in terms of risk off movement. The euro is up basically just because of tariffs. So we've obviously seen a lot of G10 currencies. The pound was up, the euro was up, we saw gold down. So gold down, I would assume, is because we've had clarity. Now, I'll be honest, I'm actually not 100% sure. And I'm one of those traders. I'm not going to sit here and try and make out like I'm the smartest guy in the room. I'm not going to sit here and tell you I'm an economist or an analyst. I'm not. I'm a trader that tries my best to understand the economics. So what I understand from gold, or what I would assume with gold, is that during this period, we had obviously a lot of uncertainty around tariffs, and obviously there's other situations like Russia, Ukraine, and Middle East and things, but whatever, we'll focus on tariffs. So there's lots of uncertainty around tariffs. What's Trump going to do? How a country's going to respond? What's happening? What's going to happen? Now we've had the news. So obviously we saw gold smash through all-time highs and reject very, very quickly. But we now know what Trump wants, which is what, we had the Trump tariff news come out. So we know that we're not uncertain around that part anymore. So it's not, in my view, unlikely this is profit taking. So I think we are going to see gold continue higher in time. But right now, I think it's more a case of we're closing positions. We know what Trump wants to do. I'm just going to get out of gold for now. And maybe we can get back in at some lower prices. But yeah, I mean, short term. So, I mean, today and the start of next week, I'm probably not going to be trading just because right now there's nothing to do. And next week, I just want to give some time. I want to allow that sort of breathing room, that time for reactions and more incoming news to just develop, because I don't want to be, I don't want to go into the markets next week saying, oh, we know what's happening with tariffs. I'm going to place trades here and there because, of whatever reason. And then we get Europe come out, we get the UK, we get Canada, we get, something else happens. And then the markets continue to dump or continue to rally. And I'm stuck in a position I can't get out of. JP Morgan have gone from being 40% chance of recession to 60. Lee James, that's completely right. Yeah, there is a lot of talk now about recessions coming and a lot more likely of a recession. So yeah, just be very careful. I think this is one of those times where if you are new to trading, you will learn a lot. Just like in COVID, just like 2008. Obviously, this isn't as big as those things, in my view. In the dot-com bubble, there'll be times in the markets where it may just not seem like it makes sense, or it might just be very scary. You don't know what's going on. The markets are parabolic. They're just moving everywhere, left and right, and you can't make money, or you might be losing money. Just sit back and breathe and just watch what happens. You don't have to be in the markets. You can just sit and watch, and you can say, okay, you can write it down. Trump said this and this happened. Why did that happen? Okay, well, it happened because of this. And you can start to just understand and get to grips with it. And then when it happens in the future, because the markets will have times in the future where the same things happen or the same behaviors repeat. And then you'll be a little bit more confident, or you can start saying, okay, well, I might expect this to happen. And you might not be as at risk. Okay, let's see. Short-term bearish from tariffs, then long-term bullish as country starts removing tariffs from the US in return for them to do the same. Yeah, we'll see. What do you think of WTI? Crude is falling. Yeah, I did kind of expect oil to start dropping. I think I spoke about it on the stream actually. I mean, I'm a bit shocked how much it's moved, but I was expecting downside. And to be quite honest with you, I'm not at the moment looking to start fading these moves. If anything, I'm looking to follow them. Same thing with the dollar. If we see dollar bulls step in, I will be looking to fade that and short the dollar. I'll be looking to short oil. I'll be looking to go long gold and silver. I'm looking to go short on the stock indexes. I essentially am just trend following. I've been, apart from gold and silver, but essentially just following this momentum. I'm not going to be the guy that's sat trying to buy the S&P right now. I was actually in the long position, but I scrapped that. Hey James, was the markets like this when Trump was president before? No, they did have tariffs. We had volatility, but this is Trump 2.0. This is yeah, it's a bit different to say the least, I think. Uh, no matter what, America has the upper hand. Igor, yes and no. The US does have the upper hand, yeah, but how can I explain it? What the US doesn't want to do is be too aggressive and too confrontational, because what could happen, I'm not saying this will happen, I'm just saying theoretically could happen, is all the countries that Trump is essentially just pushing tariffs on, especially the high tariffs, they could all just band together and start cutting the US off. And then the US would start to lose its dominance. It would start to struggle. So yes, although yeah, the US is the dominant figure right now. It could, in theory, change. I'm not saying it will. Again, I'm not saying that is going to happen. I'm just saying again, it's just it's a film theory. And it's banked by oil, but predicted 3,200 gold. Took the short, expected to reverse here for a while. Very nice. As long as you're making money. I could be wrong, but I'm pretty sure I heard Trump announcing he would drop tariffs to 0 on countries that would do it first. Maybe. I'm not sure, I'll be honest. So you can't do much to the US. Well, again, realistically, probably not, but we will have to see. I know that Trump was saying that if Europe and Canada tried to retaliate, he would just increase tariffs. But don't forget, tariffs aren't necessarily, well, they're not on the country directly. So let's take Elite Traders, for example. We serve all clients all around the world. Obviously, let's focus on the US. I'm not paying that tariff. Our Elite Traders isn't paying that tariff. It's you. If you join Elite Traders, and this again, this is an exact example, because I'm fairly sure tariffs aren't actually going to affect us. But anyway, it's you that's going to have to pay that. What was my point? I can't remember where that was actually going to. I'll be honest, kind of lost track of what I was saying. But anyway, what was I trying? I was trying. Halfway through that thought and it just disappeared. I'm sorry. I'm not really on it today. It's been it's been a mentally taxing week. I'm about over it, to be honest. But hopefully you kind of understood where I was trying to go with that. What is tariff or whatever? I assume you're asking just what a tariff is. A tariff is essentially an extra fee, basically. It's an extra tax the consumer will have to pay. So let's say you're Apple. Well, actually, Apple's not the best example. Let's say you're a European country, or sorry, a European company, and you're selling to the US. It's going to be you that has to pay an extra fee or an extra tax on that product. So it will raise prices for US consumers. And this is actually where the recession fear is starting to build, because if the US consumer is having to spend more, it's very likely they will actually end up spending less because they're not going to pay more, or they don't want to pay more. So obviously growth then will slow down. It's like GDP in the US has been revised low. Sorry, the GDP projection or prediction has been revised lower. And I can't remember who that was by. Actually, I read it in a report by an institution, but that's been revised lower due to the fact that consumers are going to have to pay more. They will actually probably end up spending less, slowing down growth and economic growth. Good. I'm glad I'm not the only one. It's been one of those weeks where I've had to be on consistently all week. And yeah, my brain is just frazzled. I think it's time for a beer and a cigar and a pizza tonight. You know, living the high life. Official MWH, whatever. I can't even speak. Long or short on what? Do you mean on the FTSE or on what market? Hey, S&P is paying the bills. We got 0.02 lots on the S&P. Crazy money. Yeah, I mean, like I said, I'm not looking to do anything this week, especially today and next week, really. It's just, again, as long as nothing really changes, I'm quite happy to just follow short-term momentum. I'm happy to sell the stocks, happy to maybe buy into gold. Definitely not selling gold, but I might buy into gold if we can see some sort of bid somewhere at some level of some level of support. Yen, I will continue to go long. Swiss, to be honest, I'm quite bullish on the Swiss at the moment as well. That's starting to do very well on the back of risk off. So yeah, just follow, again, in my book, just following what the markets are doing. I'm not trying to fight anything. I'm not overthinking. If the markets are moving down, I'm looking to sell. Heads and toes. Yeah, we can start looking at some head, shoulders, knees, and toes. Currently starting out using demos. Oh my God. If you're just getting started into trading right now, actually, you know what? Is that you will be learning at probably one of the most difficult times you probably could have done, but at least you're seeing the sort of what the market can do. It's better to start now, I would say, than start when everything's better, when we've got really nice trending markets and everything's calm and we're in clear waters. Then you can get into that thing of, okay, just buy the trend, we're good to go. That's as easy as it is. Rather than getting started now, and it's like, oh my God, what's going on? Yeah, again, then you can get that mental resilience and you can say, okay, I know what the markets can do. I know the power of Trump. I know the power of Powell. Is your mood more bearish or doji? Right now, it's a big bearish engulfing candle right now. Not because I'm in a bad mood. I'm exhausted. Late nights, early mornings. A lot of reading reports and talking to people and explaining things this week. Me and Bashi having caviar on Ballout's yacht later. Where's my invite? I've not seen Ballout. Does Ballout not like me anymore? He wasn't in my stream, and he seems to have disappeared when I came on. I think that's quite rude. Starting fights at the bar or chill? It's more of a chill vibe today, I think, Alan. I'm not in the mood to be starting fights at pubs. I started when gold was breaking highs. No start, so it was easy. Yeah, that's the thing, Josh. It's all fun and games until the trend changes. Bitcoin, please, is it bullish? You know, I've not looked at Bitcoin this whole time. It's not even on my list. Let's see. To be honest, it's actually not done very much. It's been very choppy, but it's not had much of an interesting move. I wouldn't say it's bullish, but I also wouldn't say it's bearish. It's essentially just gone from range here to another range here. There isn't anything for me to look at, say, or do on Bitcoin right now. Actually, let's just see. I wouldn't want to buy it. Put it that way. I'm not in a position where I can say I think Bitcoin's going to go high, because I just don't think it would. But technically, I think it's in a pretty nice spot here in between the fib, potentially for a higher price. And again, that's just based on technicals. However, if the US is going into recession, I think Bitcoin likely is going to go lower. I think Alan Perez said it really well, actually, when I think it was when Kenzo was on. I saw him comment saying that Bitcoin is a luxury investment. So what you will normally see, and I do completely agree with him, I think that normally you'll see people paying into 401ks, retirement accounts, typical or traditional investments like the S&P, whatever else it may be. people, the average person anyway, not the crypto bros, the average person will buy Bitcoin if they can afford to. If they've got some spare change at the end of the month or whatever, sure, put it into Bitcoin. But I don't think it's a necessity. It's not something most people at the start of the month are going to say, okay, I need to invest in Bitcoin before I pay rent or before I put into the S&P or whatever else it may be. It's better to make no money than lose it. Exactly. Buy into the S&P, hit up. I completely agree with that. ICT is outperforming markets. You know what? ICT probably is outperforming the markets because he's probably not trading, or he doesn't trade. Lee, that's good to hear. That's true as well, Sean, actually. I'm going to explain this, and this will be common knowledge for a lot of traders, but it seems like we've got a few new traders in here. So the way to measure, or a good way to measure, or sorry, I'm going to reword that. The professional way to measure your trading performance is using a benchmark index. Now, you can use anything, but typically you'll use the S&P. And this more goes for stock traders, but currency traders don't really have a benchmark index, so you will normally use the S&P as well. So what you normally do is measure it from year to date. So you can say last year the S&P did, I don't know, I can't remember what it did last year, let's say 10%. If you underperformed that, you had a bad year. And it's not bad because you performed poorly. It's just a bad year because you could have put that money into the S&P and performed better and done nothing. So this year, let me find it. Where was the start of this year? Let's just draw it from here. Oh, sorry, that's a date range. I meant the price here. So as long as you haven't lost, let's just say 10.5%, you've outperformed the S&P. So you've actually done quite well. And again, that's just the general rule. Yeah, I mean, is it a Forex James segment without a little bash on ICT? I don't think it is. It's a tradition. I benchmark against Blueberry Markets. Well, I'm with Blueberry Markets. I really like Blueberry, actually. I've got a lot of support from them. In March 2025, the US economy added 228,000 jobs. Yeah, no, you're on the right track, but no, not necessarily. I was saying it earlier, but I think that the data from today is pretty irrelevant. Long-term view, if you're trying to build an economic view outside tariffs, then yeah, sure, fine. But it seems like the markets just don't care. It seems like the full focus is on tariffs at the moment. Risk on, risk off. It seems like risk off is the move. So yeah, to be perfectly honest with you, yeah, today's news great, but who cares at the end of the day? There's more pressing matters than the unemployment rate and NFP right now. Big market. Yeah, I mean, yeah, eggs have been a great investment this year. In fact, for a while, eggs have been a great one. But I guess you can't really stockpile eggs because they'll go bad. I think the Sailor's average price on Bitcoin, I think, is around, is it 60 or 80K? I can't remember. But I think he's quite safe, actually. I don't think he's going to face any liquidation yet, anyway. I mean, it depends if you're a crypto believer or not. Hit up. I'm not here to give you financial advice, my friend. Go and see a professional accountant or a financial advisor. Oh, his average price is 67K. Right, okay. What price is Bitcoin actually at right now? Let's see. It's at 82. Yeah, he's fine for now, anyway. He's fine. Can you stockpile chickens? Oh, you can stockpile. That is very true. You got me there. You can stockpile chickens. Until it gets too expensive to import grains for them, and then you're paying more for the grains than you would on eggs. should I buy or sell gold? You should follow your plan, whatever your strategy is telling you to do. Like I said, I'm not a financial advisor. I can't tell you what to do with your money. However, my view on gold is I'm not going to trade it today. I've got no interest. But there's two situations I'm interested in. First of all, can we stay above this level? If we can, and we can start trading above, I might look to buy gold. If we break lower, my only interest then is between this 0.5 and the 618 in here. Again, if we can see a rejection, start trading to the upside, I'll look to buy. If we start breaking below, I've got no interest in gold anymore. From a technical view, anyway. A lot of cash pages about learning trades, claiming you make tons of money in a short period of time. Cash pages. I don't know what that is, my friend, unfortunately. But if someone's telling you you can make a lot of money very quickly, it's 9 times out of 10 a complete scam. Trust me, if it was easy to make money, everyone would be making money. You wouldn't have people on Section 8 or on benefits or anything like that. Everyone would just print money. So unfortunately, there is no cheat code. Unless, actually, there is one cheat code, but it costs money up front. So what you can do is you can fly to Dubai in first class or business class, rent a Lambo, rent a penthouse for a week, and just take maybe a year's worth of pictures and videos and just flex that on Instagram. And then you can say, I made it drop shipping, I made it trading, I made it by AI, I made it doing this and that. And then you could just start 20 different pages, all posting the same stuff, advertising different services. Infinite money glitch. Although I wouldn't say that's a very sustainable or moral way of doing things. Hey, James, this tariff impact, do you think as countries start putting countermeasures affecting the markets like a slow burn? Yeah, I think it depends on which countries, because not everywhere is that relevant, to be perfectly honest with you. But yeah, something if like the EU or some major player does so. I mean, okay, let me show you this. Let's go to the 15. I can't remember when was this news out. Let me just double check. So this came out around 11 a.m. So it was around here. So yeah. So this happened because China applied, what was it? 34% tariffs on America. And that was just China. That wasn't accounting for Europe, England, and anyone else. It was just China. I'm saying it was just China. Obviously, China's a big player, but I'm saying this is just China out of every other country. So yeah, I would expect the markets to continue being volatile until it's all said and done. Hello from India. Hello from the UK. Okay. Good thoughts on dollar CAD. I'd have to, excuse me. I'd really have to wait and see what's going on with tariffs. But to be honest, at the moment, it looks quite nice to go long potentially off this 200 daily moving average. And again, that's just excuse me. Again, that's just technicals. The US dollar is likely to have some sort of pullback, but I would like to fade it. So I think I'd actually quite happily go short dollar CAD. The problem is we've not really got much on Canada regarding tariffs just yet. So that could throw a spanner in the works. But yeah, just at the moment, I think short dollar CAD is likely the better idea, but maybe not right now, maybe next week. Eggs long is doing better than toilet paper long back in 2020. Yeah, that's crazy. You got 80 pips. Well done on getting 80 pips. I'm glad to hear you're making some money. Okay, I think we've covered pretty much everything. Oil continuing to the downside. The S&P is having a small pullback, but I wouldn't expect that to last. I don't really see anything else. Oh, the euro pound. This was one I was interested in. I really like going short on the euro pound because it's a very, very nice trade. Sorry, it's a very nice pair to go in for mean reversion trades. I think it might be a little bit premature right now, but if we can come up to this weekly 200 moving average, I think I might start stacking up some short positions to continue this downside. I think short term, yeah, we might continue to see it climb higher, but yeah, I would be more than happy to short this market if it does continue to go higher. Silver has now invalidated my trade idea. But yeah, no longer interested in silver longs at this point. So remove that, take it off the watch list. So that's that. Fun and games. Where is crude oil bottom? Oh, Swiss. Swift. Tell you what, I can get back to you tonight. I just need to see how the stars align, where exactly the moon is, and how it, if we get an eclipse, I'm going to have to do some stargazing and a bit of astrology to try and find that one out for you, but I will get back to you. I'm new to this trading. What exactly is a recession? A recession is essentially where everyone gets poor. So growth slows, things get expensive. In a nutshell, obviously, recession is quite a deep topic in terms of complexity, but yeah, it's essentially where everyone just starts struggling, or most people struggle. Growth slows down. So yeah, we often have rate cuts as well. So yeah, that'll be fun. AU down almost 4%. Yeah, we're getting into crypto territory with these market moves. Look at that. It's like someone rug pulled AU. Why is gold dropping? I think it's profit taking. We did discuss this previously, so I won't go into it too much. But I think gold rallied quite hard. Oh, yeah, gold climbed quite a lot due to uncertainty around tariffs. Now we have clarity on Trump's side tariffs, so there is that. So it's likely a little bit of a profit taking on that. But I don't think we're going to see a full downside because we still need to know what replies we're going to have or what responses. Any recommendations on trade videos to watch? My videos and Nick's videos are good, if I do say so myself. Still just in free fall. Yeah, I know. I mean, this is what I was saying. Just follow the markets. I mean, there is no reason to try and counter trade these moves right now. It's much easier to just say, okay, the markets are in a bit of a mess. It's moving down. I'm going to sell. And again, not financial advice, but that's just my view at this time. Trading view indicator based on moon cycles. That's interesting. I've seen a lot of numerology traders start popping up. Actually, people use numbers to trade. I don't mean price numbers. I mean like dates and times and stuff like that. It's wild. But in theory, like I say it quite a lot. Anything can work. I'm starving. Need some food. All this stress. Yeah, it's just pretty much nothing. Euro dollar doing. Interesting. Okay. Recession is when it hits the fan in all direction. GDP and employment. Yeah, there is ways to measure it. So if you look at GDP, so the formula is when we have two negative GDP prints in a row. So if you get, I don't mean negative as in lower, I mean negative as in an actual negative number. So something like negative 0.5, then -1 would be classed as a recession. And then yeah, things like unemployment ticking up and But again, recession is quite a wide topic, so I would suggest to go and actually do some research on it. The grandpa indicator, yeah, so it's a classic. You just ask someone that doesn't know how to trade if they buy or sell and just do the opposite. Oh, is the VIX coming down? Or is it going up? I'm not sure, actually. Let's see. Oh, VIX is coming down. That's nice. Again, I wouldn't expect it to last. I think next week might be just as hectic. I don't know, but I've got a feeling that we're not, we're only just here. It's like the eye of the storm. He told me to look at uranium. Who told you to look at uranium? Well, ChatGPT for trading is not a bad idea, really. I kind of use, not for trading really, but the way I work is on a Saturday, I'll sit down and I'll make notes. I will just say, okay, well, this is what JP Morgan's looking at. This is what ING says, blah, 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 blah. And I'll just take all the notes. I'll just give it to ChatGPT. I'll say, can you just organize this? So say, could you put all these notes into organization by currency? So can you put all this stuff into the AUD or the pound or the US dollar, and it just organizes it. But honestly, I think AI is going to be quite a huge player in trading at some point. Not anytime soon. I'm not sure if you can hear my cat. I do apologize. But yeah, it wouldn't surprise me. I think AI is a very powerful tool, especially as it gets better and better. Grandma indicators better than retail position. Yeah, I would say so. Yeah, okay. So on pound dollar? No. I've not been on pound dollar or euro pound for ages, actually. Cat's indicator, yeah, the cat's saying to sell everything, just offload, full margin, short gold. So he's not a very good quant, but I keep him around. Cat's indicator. Did your grandma also spell it SMP? SMP. I would like to see a pullback in these markets. Like I said, I'm not looking to counter trade, but if we can see a pullback, I'll quite happily follow into these moves. I quite often say news moves get corrected, which I stand by, but not like this. I wouldn't say this is going to get a correction as I would normally say. So if we can get some sort of 50% pullback, specifically on yen pairs, Swiss pairs, I'd quite happily continue to short. He already told me the TP, so the TP on gold would be at around 2,000. He didn't give me an exact number. Like I said, he's a bit of a bad quantitative analysis, but I keep him around because he keeps me warm at night. Although he's pretty annoying. But again, that's from my cat. It's not from me, so I don't need to say it's not financial advice. So if you lose your money, have fun trying to sue a cat. Okay, right. Let's see what the EdgeFinder is saying, because I don't think we've looked yet. Also, I don't know how long this has been here, but Nick told me about it a few days ago. It's the eco, so I assume it means economics only. So it removes sentiment, and to be honest, I don't really care about sentiment. I like COT, but I don't really care what retail's doing too much. So this is where I'm looking at. But if the A1 guys are listening, please could you add the bias filter, because I can't get rid of the neutral ones. But also, I was saying yesterday, I couldn't understand why Nick was long on the New Zealand dollar, but it makes sense now because I didn't check this tab. Silver's still bullish, gold's still bullish. So it's a nice sign we can continue longs at some point. I also do quite like New Zealand, Aussie dollar, euro dollar longs, pound dollar longs as well. I don't think they're quite there yet. I'd need to see the dollar have a bit of a pullback before I continued short. Dollar CAD, dollar ZAR, dollar yen makes sense. Also dollar Swiss. I actually really like dollar Swiss. I've not looked at it yet. Never mind. Seems I've missed it, unfortunately. Didn't quite get the entry up here. But again, if I could see some pullback here, I would quite happily go short again. Cat Guru. Yeah. You cat sits in front of the screen, chases your hand. Yeah, it was mine. I put my cat on the desk a few days ago, and he's just watching the mouse. It was quite cute, bless him. You can see his eyes going crazy just watching it. What do I think about CAD Swiss? I'll look at CAD Swiss in a second. I'm just yeah, I don't think I want to buy gold here. Just yet, anyway. Maybe if we can see some sort of rejection in a couple of hours, maybe I'd be interested. But to be honest, this 50% level is looking much more attractive because that would allow price to come and meet this 200 moving average here. Be a 50% retracement. It would also be within support. So yeah, I think upside from there is ideal, but obviously I can't really tell the market to go there. Swiss. I mean, shorts make sense. The Swiss is performing very, very well in this risk-off market. So it's the same thing I was saying earlier, just looking for these pullbacks. So again, if we could see a 50% retracement, I would likely look to go short. I'm very bullish on the Swiss, very bullish on the yen, bullish on gold, silver. That's pretty much it. Short everything else. Euro Swiss, I would also expect downside in Euro Swiss, but it's not something I'm really too interested in going into a position on just yet. Had a really nice correction of this move, however. But yeah, Euro Swiss is a nice position, but not for me. Okay. Just going to take a look how my 0.02 position's doing. Very, very well. Crazy money being generated. The DAX also made some really good money on the DAX. Yeah, we've been trading the DAX quite a lot, not on this account, but we've had a few positions. I took the short today, scaled in here for a scalp. But yeah, I think the DAX is the same thing. Just short. I mean, what else can you do? Realistic, I'm not even joking. What else can you do? Are you going to be the guy that is trying to buy every drop, or are you going to be the guy that attempts the short, might not work out, attempts the short, and is, I would say, these markets are very likely to just continue. So I can't say anything other than that. I think it'd be irresponsible for me to say look to go long. However, if you're looking for a longer term outlook, I think we could start looking at sort of weekly and monthly levels to potentially go long. But again, in that situation, you would have to just make sure the tariff news has calmed down. Our institutions buy NAS. You know what? I haven't checked. Let's see. What does the trusty EdgeFinder tell us? By the way, you can get 45% off the EdgeFinder with code ELITE. That's more than what Nick's offering you, by the way. Nick's only offering 40%. What cheapskate. You can get 45% off through me. The joke. Well, no, it's not. Actually, you do get 45% off. I was joking about Nick being a cheapskate. Anyway, what is COT data telling us about the NAS? Wow, actually really heavy selling. Net change of negative 5%. Thought they are still majority long, but shorts are being added. Actually, sorry, longs are being removed. Longs also getting removed. God, it's what I mean. I just can't talk today. Longs have been removed. Shorts are also being removed, but at a slower pace. So you can see here, 14,000, well, almost 15,000. Yeah, but majority still long. But this net change is very telling. Your exports will fall off, will fall to the cliff. My exports, I don't have any exports, unfortunately. I don't move physical products. Gold hasn't been rejecting at levels we would like. Yeah, I know. Can I get it for free? I think, unfortunately, you missed that period to get free copy of EdgeFinder. I think they were doing a free trial or something a few days ago or a few weeks ago. I want $5 on gold to sell from you. I really hope you joke. Please tell me you didn't sell gold because of that. Although, actually, if it makes money, I might just do what the prop firm kid did with the chicken. I might just do it with my cat. Is COT data from today? No, COT data, unfortunately, is a bit of a lagging indicator. So it comes out once a week. I'm not sure if the EdgeFinder gets it on a set day every week or they just update it when they can. I'm not 100% sure. I'm fairly sure COT data is filled out on a Tuesday by institutions and it's published on Wednesday. I think then normally you'll get the aggregate softwares like the EdgeFinder updated on Thursday. But again, I'm just speaking what I think. I'm not 100% sure exactly what day the EdgeFinder does update it every week. But yeah, it's a weekly thing. It's not a daily thing. I wish it was daily. That would make our lives much easier. Can you give tips on how to achieve funded account? Unfortunately, not. I'm not a prop firm trader. I would say the I'd say you've got two approaches. You've got one where, and I used it. I did pass a prop firm doing this, but it was risky. And I would only say to do this if you can afford to buy a new one. If this is, if money's not much of an issue and you're doing it just to get funded. So you would risk 1% on the first trade. If this wins, you would go for a 1 to 2. So if that wins, you'd risk the 2% on the next trade. Then you would risk 3% on the you'd risk 4% on the next trade. Again, going for 1 to 2s in each one. Then the last one would be 8%, and you'd very likely pass, obviously before TP hits on that one, depending on what your target is. Obviously, again, that's very high risk, so I'm not saying that's a good idea. If you wanted to do it properly, then I would risk 0.5 on each trade and just take it slow. But that's all I've got for you. That's all the wisdom I can really provide. Again, I'm not a prop firm trader. I don't really like trading props. Anyway, Chris Pulver will be here in about 5 minutes to take over. So if you've got any questions for me, let me know. I'll answer them if I can. But yeah, I'll be off pretty soon. Yeah, no problem. I think once we get the news and once this is all over, we're going to have a huge opportunity to make some money. A lot of sort of reversions back down will be great. Don't go. Unfortunately, I've got to. I think I might pass out of starvation. I'm really. Oh, my girlfriend just doesn't feed me. You see, she tells me I can't have food. She locks her cupboard. She treats me awfully. So after the stream, I'm gonna have to go and see if I can find some crumbs in the kitchen. Yeah. All right, shall I come back on Monday? We can see. Almost forgot to subscribe. Yeah, you can't be doing that. Hi James, laptop setup you're using. I've got a MacBook, which you can see here. Then I've got two, I think they're 32-inch monitors. I'm not 100% sure on the actual size, but I've got two widescreen curved monitors that the laptop's plugged into. And that's it. And I've got a Magic Keyboard and a Logitech mouse. Take screenshots for me. You know what, Shadow? Remind me on Monday, 'cause if it works out, this would make a funny reel, a funny little TikTok. You know what, Josh? I think you're right. She's going to whip out the frying pan and hit me with it. It's not been the best trading week either. So, oh, she's giving me evil. Lee, that's really inappropriate, and it's not true. I get beaten enough in the markets. Anyway, it's all good. Obviously, just for clarification, I'm joking. Of course, Forex James is the breadwinner. Seagold is trying, let's say, move. It does every Friday. Yeah, just profit taking. I'm not concerned about the precious metals right now. I think it's pretty straightforward. Just buy the dips if you can. But again, it's Friday. We're pretty much out of news. We've got Fed talking later today. But yeah, there's no reason to be placing new trades right now. You know what's sad, Joseph? I closed Aussie New Zealand. Actually, what? I think it was around entry. I can't remember off the top of my head. But yeah, I was sat in this position. Let me do this. So I think my short was somewhere here, and I was sat through all of this drawdown and chop, and I closed it, yeah, roughly around here for about, I think it was 0.5%, maybe a bit less. When I could have held it for a bit longer, but the problem was I just didn't want to take that risk into tariffs. So I played it maybe too cautiously in hindsight, but I did what I thought was right at the time, so I didn't really make anything off it, unfortunately. Ah, what a week. Yeah, okay. I think I'll probably close these S&P positions pretty soon. Place them just to have a little bit of a Friday gamble as you do. Again, it's only 0.02, so it's really nothing major. So I'm just actually going to get out of these just so I don't hold them over the weekend. So that's done. So that's maybe a pint paid for tonight. We'll see. You know what, Shadow? There's a reel on the Elite Traders Instagram. My cat was in it. I can't remember what the reel was about, but yeah, he sat with me on the reel. I'll try and get him on stream at some point, but he's a bit rude, to be honest. He doesn't like to be picked up or anything, so it's very difficult. When did you get out of dollar yen? You know what? Dollar yen is another one. I'm really salty. This is what I mean. It's not been a bad week. It's just been frustrating because a lot of the ideas I had worked out really well. So again, I was sat on I think on this stream a couple of days ago talking about the Swiss longs. So obviously XXX Swiss shorts. A lot of those played out really well, but I was just not willing to take those trades. So I was short dollar yen here with a stop loss. It was around here. So yeah, we closed for 0.6, so it was roughly around here. So this trade was really precarious. I think we had a total of roughly around 25 days of just drawdown. This was one of those trades because it was such a long-term swing trade. It just didn't do anything for a long period other than just trail into drawdown, almost hit stops, and then within what's this, a couple of hours, it was in profit, so I just closed it. And again, this is one of the downsides of running a service because it's not just me I'm thinking about. Because if it was just me, I probably would have just let it run, maybe move stops to break even. But I've got to think about what's best for other people. And I think obviously being overly cautious, especially when Trump is announcing tariffs, is kind of what I've got to do. Maybe that's a little bit of cope. Maybe that's what I'm telling myself to not feel bad about missing all these moves. But there you go. It is what it is. Silver and gold may give us better opportunities next week. Vision 97, I do completely agree. My cat's name, he's called Mr. Cat. He was adopted. So we got him when he was we got him when he was seven or eight. So we didn't really know his name. I think his name was actually like Elliot or something boring. So we've renamed him to Mr. Cat. Margin call. Yeah, can name him Margin call. NFP. You missed NFP, my friend. That was about 2 hours ago. NFP on paper was, yes, it was positive for the dollar. It did have an uptick. I think actually, let's see, what did it come out? 228K. So yeah, it definitely beat forecast significantly. Actually, it beat previous as well. But I think tariffs are just weighing down. I think that's the main focus of investors and the markets right now. So I don't really think the data is that relevant, to be quite honest with you. I think we likely would have seen a much larger move on the dollar if it wasn't for tariffs. My cat's name is Miss BB. Yeah. Last thing, Chandler, we're men of class. We are the pinnacle of society with names like Miss and Mister. With all this selling, where's the money going? It's going into your pockets. Or, well, maybe not your pockets, but it's going into pockets. So what you've got to keep in mind is this isn't necessarily just selling. And when I mean selling, it's not just people clicking sell for the market to go down. It's selling also means if you've been holding long positions through, last year, you might be selling those positions, aka closing them out and realizing the profit. So there is that. So it's not people just actually clicking sell, if that makes sense, or speculative selling. It's profit taking. In that case, obviously that money will be in the trading account or in someone's pocket or whatever. Obviously, when you close out of a position, when you close out of a long position, you are still selling it. So I just wanted to clear that. Still holding dollar yens. Yes, that DD was brutal. Lovely stuff. You've got better position than I do then. But yeah, that drawdown was horrible. I've got to say though, it's another mentally taxing thing was managing the positions, but the weight off my shoulders now is very nice because I know I can come back on Monday with no positions and I can just start fresh. I can say, okay, I can get back into the markets if I need to. Cambodia to cut tariffs on US goods to 5% instead of 35%. Interesting. I'm not sure what comes out of Cambodia actually. Again, I'm not really big on stocks, so I don't really pay attention to things like what is in Cambodia in terms of import export. I don't trade Cambodia. Mango's my broker. Fair enough, Josh. Don't worry. In time, you'll take that money back. I think we'll get a gap if there is news, but if not, probably not. No. Gaps normally appear when we have something to move the markets, but obviously the markets are closed. So if we don't have anything over the weekend, then very likely we won't. Trading sucks right now. Hopefully we'll have a setup file speech in an hour. Right, you've got the wrong mindset there. It's Friday. It's coming into Friday evening for me anyway. The Powell speech likely won't have anything of any relevant or any market moving things in it. So to be honest, if you've had a bad period, just chill. Take the weekend and just relax. Do something else away from the markets. But yeah, I mean, I'm going to be honest, trading actually hasn't sucked recently. It's been very, very good. And if you were able to do sort of the research and come to a conclusion, you will have likely come to the conclusion that it would have been a risk-off market. I don't think that was really a surprise, especially to the traders that pay attention to economics. So what you really had to do is go long yen, which I've been doing since the start of the year. Excuse me, long Swiss, and that's it. I mean, gold and silver are a different story, but yeah, I mean, and then sell the stock indexes and you're pretty much good to go. But yeah, I mean, again, I can understand why it has been such a difficult period. I'm not trying to make this out like I'm the best trader or I made loads of money because I definitely didn't. But yeah, it's just a case of being very or being able to adapt very quickly and understanding why you need to adapt, because then you know where to adapt to. Anyway, guys, it seems like Chris is here to take over the show, so don't leave when I leave, because Chris is a great trader. You're in great hands with him. So guys, I will see you all next week. Have a great weekend. Take some time, breathe and relax. And obviously don't get margin called, as always. I'll see you all later. Thank you for being here.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. Just getting a couple trades posted here for pulver alerts. Sold some premium this morning. Just give me a moment here. Let's get this going. Okay, I'm just going to get this posted in pulver alerts. Sold some premium this morning. IV ranks are as high as I've seen it since COVID. That's not nothing. So I'm taking advantage of that by selling some puts and SPY, puts and Qs. Yesterday I sold puts in SPY and DIA, but I was able to go lower and out less time and make more credit, just because we had a huge jump in volatility. So, take it at your risk. I'm willing to own some of the underlying shares. If you're not, then probably not take these trades, but I think I'm getting a pretty decent deal and pretty decent discount. So that is the plan. So that trade just got posted. So basically, I'm going out about 46 days for about $825 of income if the market's going to drop peak to trough 30%. Not saying that we can't, but unlikely. So right now, I have this trade. This trade is profitable. Close it out for a winner this morning. This trade is a second one that's in for the SPX for the day. And I also have a broke wing butterfly at 5,400. So if we just have like another kind of floating move on the day and price just kind of hangs out, chops around, so be it. I see a big level of support around 5,100 today if the market's going to continue to drift lower. Yesterday I had an interesting trade. It was a butterfly spread at the end of the day. I got in for about 65 cents here and pinned it at 5,400. A 65-cent debit ended up paying $5.80 at close. That was a pretty wild kind of, perfect trade, which obviously I'm not upset with. So here's some levels that I'm watching. Here's SPX real time 5,100, pretty massive level. That's if it gets there for the day. Obviously, the market is down. We've had nasty plunges. I closed out for around 12K in profit. Not that that helps. I'm still down for the year. I officially turned red for this last little bit. Yesterday, I was down about 20, or I was up still about 25, 30 grand in my account. And now the whole portfolio has turned red. So I'm down about 2.7% year to date, which is manageable considering where the markets are at. It still sucks. And all I can do is kind of grind through it. So anywho, selling some premium. Prices are ridiculous. I mean, Ivy rank is as high as I've ever seen it. SPY, 102 on the SPY. That's insane. QQQ, 88. The DIA, 116. Like, these are some of the highest I've ever seen. 108 on Russell. I'm glad I didn't call that bottom yesterday on the IWM. So possibly a drift into 5,100 today. If we're going to go directional, that's where I'd be looking to go, is just trading it down towards that 5,100 handle. Pretty simple stuff. If you put in a bear call spread, this is intraday stuff for 0DTE. If price is going to find that level, a bear call spread that you could maybe pull 30, 40, 50 cents out of, maybe $1, depends on how close you are to the money, you could quickly see that go in your favor. So if I pulled in a trade for $1 and price goes lower, I could see that dollar turn into 80 cents, 75 cents, 70 cents pretty quickly. I took a trade this morning, 235. I closed it out for $1.95 within about 30 minutes. So not too bad. If we see some, gapping and chopping, that wouldn't be a terrible surprise for a Friday. We do have Powell, that's on the calendar for today around 11 a.m. He's supposed to speak at 11:25. I mean, is this the Fed put? Probably not. What I did notice in the Fed watch tool is that now we're looking at about 5 cuts for the year. So pause, still potentially a pause in May. Still potentially a pause in May. And then cut for June expected, cut for July, cut for September, cut for October, cut for December. That's where things stand right now. Now the market has priced in. Look at the how low the probabilities are. Like once they start the cutting process, probabilities are extremely low that we pause. So I think what the market is potentially after is, do they cut more than 25 basis points? And I don't know if it's a good thing or bad thing. Clearly, cutting 50 basis points last September ignited a complete opposite move in the yields. But one really solid trade right now is TLT. US 10-year is going down. This is actually a very helpful thing for the market. Not the market, but this helps interest rates, where if you're looking to buy a car, it's getting cheaper. You're looking to buy a home, it's getting cheaper interest rate wise. Doesn't mean that the prices are changing. I mean, I read yesterday that Ford is unveiling employee pricing for everyone right now, probably a limited window. But if interest rates go down with it, that's pretty encouraging. If right now you feel like you need to go buy a car. I was joking yesterday that I thought, when people are panicking, they're buying water and toilet paper, but instead they run to the car dealership and they want to buy a car thinking that the price is going to go up. I guess if you need a vehicle, that's one thing, but I would not be in a hurry to be buying a big product like that. What else? TLT. I did a roll on this yesterday, and I'm thankful that I did. Now I've rolled my TLT up to $96. So I plotted symmetry here. I now have part of my diagonal spread is a 65 by 96, and my debit's around $20. So 65 plus 20. Oops. Yeah, I guess 65 plus 20 is my break even now, and it gets called away at 96. I make around $11. I want to say 3,000. Yeah, so my TLT trade could be worth about 33 grand if we get above 96. I'm pretty bullish on TLT all the way up to these highs in the hundreds. So I may look at one more roll if this just continues to run pretty hot. I think TLT is a pretty darn good looking trade. We're at 93.84 right now. In fact, I wouldn't mind taking some shares here. So this is a cash account. And let me go to TLT. Let's have a look. So TLT, it's a cash account, so I got to be careful on what I allocate. I don't really want to buy 100 shares, but I think I could buy at least 50. It doesn't go up a ton though. I mean, buy 50 shares and it goes up 93.88 to 100. I mean, I don't make a lot of money on that trade. So $6.15 times 50. Yippee skippy, I make $300. God, I wish I could just trade freaking options on this cash account. Kind of sucks. It's like being handcuffed the way that I like to trade. But it is what it is. So let's see. It's fine. If I bought 50 shares, it'd still tie up about 4 grand. I'm going to take a stab at it. So let's go, not SPX, let's go TLT. Long, go. If I buy 50 shares of this allocation, I'm just mindful. I mean, I've got $47,000 in buying power, so I don't want to tie up, 10% of that with a purchase. However, actually what might be worth it would be if I go to positions here, dump my BIL. I'm down $60 in BIL. Take that buying power back. Let me close this down. So I'm going to close this here at 91.47. Okay, now I just got some more buying power back. We're at 68K. Now I'll buy a tranche. So I'll go 100 shares. All right, I'm going to go 100 shares TLT. Long TLT. There we go. So 93.80. Let's go after it. So I'm going to go 100 shares. 93.80. Looks like 85, maybe 86. So bought some shares at 93.87. Buy. So that trade is in, and I'm going to put in a closing order at $100. Get that buying power back. Okay. So 100 is up here. We've had previous highs at 100 plus. I mean, I could try to get greedy on that little drift, but 100 is a nice round number. See if we get there. Russell 1.5% away from market halt. Wow. Yeah, I mean, we're down, right? S&P down 4%, Q's down 4%, Russell down 5+%, Dow down 3%. Day 2 of the chaos, VIX still up here. We're talking VIX levels like we've got to. I mean, historically, we're seeing some straight up like crisis prices, right? VIX up here towards 45. That's higher than everything in 2022. That is matching one of the single day spikes we saw since August 5th. And then you're talking COVID, and then you're talking Volmageddon in 2018, your sell off in 2015, and before that, sovereign debt crisis in 2011, and great financial crisis. So you will remember Liberation Day and what it caused for the first 4 months of trading, 3+ months of trading, I guess, in 2025. Now I'm always wondering like when that reversion is going to take place. This also makes me want to. I don't think that the bottom is necessarily in, but I'm curious if I took a stab at some SPXY here. We are down to some fresh lows. I don't know how much lower this gets. I don't know. I don't know why I'm so reluctant. Like this thing doesn't really move that much. If I bought 100 shares and it goes, a few dollars against me, it's not the end of the world. But I like maybe we're not done. Maybe this whole VIX idea is not done. Here's the dollar, by the way, finding some balance, right? Dollar had a ridiculous gap and crash yesterday, and now it's fighting back. You possibly are seeing some safe haven flows into the dollar. Here's currency strength. Good Lord. So Swiss on top and JPY and dollar. So risk off flows are pretty obvious. Massive volatility on the New Zealand and the Aussie. Ooh, baby. Let's take a look. Gold, oil, silver, oil. Oh, baby. There's the floor breaking. Okay. We have some wild stuff going on. I also saw that copper is crashing in a pretty big way as well. So oil, floor is broken. I don't know where this is going to stop. Maybe there's a round number support at 60. I've been looking for this potential breakout swing. That's what this yellow box is symmetry down to about $35. It may not happen in a straight line, but it also might. Who the hell knows? But this is now officially, if it stays there, then we have a floor right around 65 that is broken. So if there's any traders out there, a break, retest, and go. If you want to get short oil, structurally, it looks pretty good. Unless this is going to be a bear trap. Then the only way that's going to happen is if this thing just snaps back up aggressively, then maybe there's a bottom getting put in. But I say based on the judgment of our prices of the indexes and everything is risk off right now, oil is probably risk off as well. So that's that. UNG still showing resiliency, which is kind of encouraging. Gold at 30.43. There's your pivot on the dollar, and there's your pivot in gold. It's what I talked about. Just said, be aware that this is likely going to have a correction. What's the factor? Could be timing with the Q2 starting. Could be a pivot on the dollar. Looks like that crash yesterday kind of pivoted the dollar, and now gold is selling off. I don't think this is a bad thing, right? I mean, this technically has been long overdue. So I'm kind of happy to see it. You just don't know how nasty this is going to get, right? So, I mean, levels to watch on gold would be in the near term, previous levels here, previous levels here. I, for one, am more excited about like the 144 to 200 pullback zone. I like to see gold at least try to get to there. Try to get to there. So not a bad play. Do I want to short gold? Probably not. I think I'm trying to keep positions pretty close to the vest right now. Don't need to do anything stupid. I had some profits running all year through all this chaos, and officially turned red today. So it's now protection. I've got a lot of hedges. I closed off some profits today on a synthetic short, and that's fine. I've got some hedges running in futures, which offer massive reward to risk. So right now, my futures trade, I've got a position for futures running for about 30K right now. So that's good. I've got another one for 10K. That's good. So I've got about $40,000 in hedges, which is fine, but that's not enough to offset, what I'm currently dealing with, right? So I can take the profit. It still doesn't mean there's not more pain ahead. The nice thing is with these trades, these are kind of the just in case black swan. If we're going to, 5,000 on the SPX, if we're going to 4,900, 4,800, those are probably the technical levels that I'd say, yeah, I'm gonna start looking to lock in some profits there. So if I go SPX for a moment, we're trading at 51.71, right? We have August lows back here on 51.25. I mean, this is insane. This really is. But I've got to say, this is why I talked about the floor at 5,500 being so important. If we don't hold this floor, there's nothing stopping this market, right? There is no support here until this low, and I don't think the market gives a crap about those lows because that previous high is way more important resistance. So to me, if you're lucky right now, the bulls would come back and just try to find a gap here before they sell off again, if you're lucky. Otherwise, this could be just, buckle the fudge up for Monday. Think about the futures flows coming into Sunday night. If it's going to be like another monster gap lower, having 1, 2, 3 ridiculous days, it might be literally one of the worst sell-offs this market has ever seen in a short amount of time like this. Maybe. It could be the equivalent of like a 1987 type move. But if I look at where this is at, if we did crash down to like 5,000 or 4,900, I'm taking a stab at least at some type of retracement, and maybe this is where the Fed can step. I don't know. There could be all sorts of crap happening. Like the Fed could be ready to step in. I don't think Powell's going to say anything about it today. But if we dropped another, 300 points in a day, and we're talking some severe damage done in such a short amount of time, this is pretty wild. If the market's halted today, that's probably a problem because it's going to resume selling. So this is not done. This pain is not done. I'm just telling you, be careful. All right. So not trying to be a hero. These trades are working out fine as long as this level holds for the day or this level holds. I'll make some money. I've got a broken wing butterfly that'll make some money. Likely, I doubt we're coming back to the highs today. But gold is falling, which I said it's probably fine. I've been talking about a top in gold coming at any point, and now it looks like it's happening because the dollar's pivoting pretty hard. So dollar pivoting somewhat hard, gold pivoting. This will be an interesting spot to watch for the dollar. If we come back into this level here, is this enough of a support zone? We came right back into the breakout point on the dollar. I wonder if we could settle into these better lows around 101 to 100. We didn't. It turned pretty hard today. The one trade that's also probably working out pretty well is FXY. We're way up here towards 63. I'm holding FXY shares until probably 65 or 66. I own this around $58. So I'm just going to keep holding this for another hedge. Let's go. One more look on gold. How many of you are excited to buy the dip on gold? Maybe some of you. How many of you are shorting gold right now? If I'm buying the dip on gold, it's down here. It's in this area. I want to see this bar count get hit. And it's, for gold to be like a safe haven bid, it's funny how now that's like everything's down, the market is down, but yet gold is it's selling off. It's like gold has been traded more like an asset as opposed to a safe haven. But I'm just curious where the next level is. To me, technically, this is where I'd be scooping up some more gold, or at least playing some gold futures. Do I want to put in a short trade now? Not necessarily. This market is doing potentially very stupid things, like very stupid things. So if that is the case, like I don't need to be a hero. I don't need to call the top on gold. The amount of volatility the market is experiencing right now as well. We could have wild swings that are not even close to getting priced in yet. You know, and considering today is a Friday, we go into next week. If the futures market just has an absolute dump coming into Sunday, Monday, granted, it could put in a bottom, but it could also be 3 to 5% lower. And that amount of like pain is going to be felt across the board. And again, you're going to see recession talks. You're going to see global economy crashes. You're going to see all sorts of stuff. Major stuff happening right now. Okay. All right. Meanwhile, somehow, this is probably a huge for now. This is probably a good sign for Bitcoin to be hanging in there at 82.4. It's not doing anything. I don't know if this chart's broken. Like, I'm gonna knock on my screen here. I mean, Bitcoin's not moving. It's probably not a bad thing. MicroStrategy, a little bit more volatile, but Bitcoin showing some resiliency, which is pretty impressive. Copper, holy crap. I mean, copper has dropped from the highs about 17%, and most of that coming in the last 2 days. I still have a trade on copper that I think should be fine. I'm still taking on a little bit of risk. It's risk. I'm risking like $1,000. But we'll see if there is a bounce from here. Japanese yen. That's the trade that I wanted, dude. I mean, it's fine. I still made good profit on this one. I'm still long FXY. It's fine. But futures would just pay. You just have the extra leverage in futures. So FXY is up around $2,000. Nope. Yeah, about $2,000. Nikkei down hard. Japanese yen up. EWJ. Oh my God. So the Nikkei is trading pretty much like the U.S. stock market now. It's nuts. I think everything's down. Everything's got to be down. There's no way like DAX is going to be dumping here. Yep, DAX is down. Hey, there you go. Right? Everyone thought this is the big rotation out of the U.S. and Germany's going to do great, and Euro stocks are doing great, and FTSE's doing great, and China's doing great. And what do we talk about? If the U.S. goes down, it's dragging everybody with it. Everybody. So now the question is, will this market settle in on a rebuild with better trading terms? I guess that's the point of this whole idea of a trade war. Or are we about to be on the brink of something worse? I mean, I'm typically always trading as a glass half full guy, even though it doesn't seem easy in the face of this like nasty type of movement. But I told you, like, there's no way you're going to have the Euro stock doing well, or DAX doing well, or FTSE doing well, or China doing well, or anything doing well if the U.S. isn't showing resiliency. Right? So, yep, Powell's speech in the next like 30 minutes or so. We'll see, 30 to 40 minutes. FTSE, yikes. Argentina, yikes. China's still hanging in there, but I rent China, not buy China. It's short term for me. I still have some plays. Apple, Mag 7 way the heck down here. I do have a ratio spread. I think a 190. This one here. This one expires in 2 weeks. I might take some shares of Apple. I might also regret that. We'll see. It's down 26%. Mags also down to some fresh lows. And this is more than a rotation. Mags is down about 29%. Apple's down a bunch. Amazon down a bunch. I should probably check on some puts that I have running. Broadcom, buy. Google, back down to the lows from September of last year. Watching. Meta. So I said I don't want to buy at the 200 moving average. SLB, that's a steel maker. That's an energy play. Meta cancels content moderation. Okay, whatever. Anything here? No. Let me go SLB. That's Schaumburger. Yikes. Bye energy. So, well, if you wanted discounts, you're getting them. So the good thing is having some cash ready. I mean, I've still got $1.1 million to pick and choose what I want to get on sale. I just don't think picking bottoms right now is the play. I think there's still more to go. I mean, Meta, for example, where would I be interested? I would load this thing up around $400. I at least try to take some nibbles on it. I'm curious where I can sell a put for right now, honestly. Maybe a decent amount. Let me see. If I go Meta. Meta 114 Ivy rank. Holy shnikes. We've got earnings. May 23. How low can I go? I could go down to, I mean, a 5 delta. Would I own some shares of Meta at 350? Maybe. Maybe. But I also don't forget that this is down 76% during 2022. So I don't forget that for a second. This is a great stock that's obviously made a ton of investors a ton of money, but still very volatile, you know? So could we have that's a 48% pullback right there. But who knows? Like I said, not trying to pick the bottoms. Microsoft down to 367. All right. This trades out with a 370 assignment if I get it. I don't think I got to assign anything yet. Not yet. Microsoft is still running. Just some partial shares, 370. It's only out 13 days, but we'll see. Any sniff of recovery would be pretty cool right now. This expiration is out 2 more weeks. I think it's out 2 more weeks. April 17th. Nope. So it's out to, yeah, it's 2 more weeks, right? 4th, 11th to the 17th. Why does that not seem right? Is that over Easter? Thursday. Because we have Good Friday on the 18th. I see. All right. Netflix. Broken wing butterfly up above, looking good. This trade's profitable. That was done and closed. Long-term levels on Netflix, look left. Previous highs back here in 2021. That's at least a starting point. Could it get worse? I mean, here's a good swing. There's your low. There's your high. If you pull back 50% or 61%, technically speaking, that's a great spot. So Netflix at 500 looks awesome. Meta 400 or less looks awesome. I mean, there will be some fantastic spots here. Question is are we going to see them? If we do, if we're talking Netflix down here to $500, if we're talking Meta at sub 400, Mags isn't done selling off, market's not done selling off. Buckle up. Yep. Good point, Igor, for that question that popped in for why Aussie falling. Yeah, it's risk off, man. China retaliating with tariffs, yes. So trade war, baby. That's what's going on. It's not good. Berkshire finally dropping. I wanted to short that yesterday. Glad I didn't. Well, I wish I did, but whatever. Tesla 239. Son of a bee. Well, it wouldn't matter because my 247 would have been called away anyway. We'll see what that trade looks like. Tesla on some of my covered calls here. Tesla. So I'm already up 71% of that covered call. Crazy. I mean, if we sell off it, I could pull in most of that credit like right away, and then even maybe roll this again for next week, or just take the profit and put on a new one and try to collect more premium since IV's even higher. This is nuts. Here's the daily price action. So we had a 5390 close. What's that low? Close at 50. Where the heck's my close? Well, I'll guesstimate it. 5394 close yesterday. This is the 5100 level that I'm talking about right there. So this is probably the one final level. If there's any market maker holding today, that's around 5100. Otherwise, I mean, hell, we might have a halt today. It's going to be close. These markets are getting crushed. Almost 5% in the 5% in the S&P. Wow. Well, let's check some futures hedges, shall we? Futures hedges up around 45 grand. Thankfully, still have some more hopefully to go. I think I've got a hedge here in SPY. So this hedge is up around $700. Yep. So those are still running. The 525 by 480. I mean, it's what's nuts is we're trading there right now. I mean, we're at 511 right now. I'm in the money on my long put that I put in like weeks ago. We were trading at like 555, 560. Put in this 525 is now trading in the money. Crazy. So I mean, I'm up 69% on the risk. I'd like to be up, 100, 200% if possible. But it's happening so fast. I might just have to look at, intelligently taking profit around like the 500 to 490 handle, just because that is, I mean, I think that's where the market's going to be looking at some bottoms. All right. And yes, we have Powell coming in about 30 minutes. I do have a hard stop today at 11 o'clock, so I'm going to wrap things up here in just a few minutes. Airline stocks, I mean, no thanks. I mean, look, this is what makes markets wild and crazy. It's been easy the last couple of years. The market's done nothing but try to go up and grind higher. Everything looks good. These are valuations that are getting absolutely smoked right now. Market cap is getting destroyed, right? Mag 7, I mean, who knows how many hundreds of billions or trillions of dollars have been shed from market caps over the last 2 to 3 weeks, not to mention the start of the year when we had the correction. But I mean, look, this is how the market is pricing in worst case scenario. This market's pricing in tariff, trade war, valuations, global recession, like all this is happening at once. That's why it seems so crazy and chaotic, right? But I mean, Delta Airlines at $35, I mean, it's down 50%. You'd think it's like, hey, it might be on sale. I mean, honestly, if the premiums are high enough, I might even take a stab at it. I don't know if the premium is going to be great, but let me check. Would I be willing to own Delta Airlines at literally COVID levels at $20? Let's find out. So if I went out to, I mean, I could go out and see like how profitable this would be. Nope. So I mean, if I'm going out for like what I like is like a 40 to 60 day window, I'm not getting any premium for that. But if I went out to the end of the year, because it's so uncertain right now, if I go out December and I go to $20 and say, look, I'm going to own Delta at $20, literally COVID levels. Okay. Would we crash through COVID levels at $20, 1918 when the whole world stopped? Probably not. So, I mean, for an income trade, if I did a 1, 2, 3, 4, 5, 6, let me move these down. So I can make $650. I would be willing to take on the shares. Let me put this in a PM account. Okay, it cost me $700 in buying power to make $650 on what I think is a pretty safe trade. It's like if I own shares of this, it would be I own shares literally at COVID prices. Just a couple dollars off COVID prices. It's not a bad play in my opinion. Now, I'd have to be willing to own the shares. That would be 400 shares with a break even of around 2150. So 20 plus 21 plus 22 plus 23. I do that right? Divided by 4. So I'd own the shares at 2150. I'd have 400 shares. Okay, so that's a cash tie-up. Cut that in a third, so probably $2,000 or $3,000 in buying power for my portfolio margin accounts. I like the trade. I don't know if I can get filled there. I'm going to try. 650s. I mean, I'm probably going to get filled closer to like $6, but let's try. I'll be just under the mid price. 625 just got filled. Cool. I'm going to take this trade real quick. 9372. Place 4. All right, just got filled. 1, 2, 3, 4, 5, 6 accounts, $6.24. Okay. Yeah, so I'm going to add that in. This is Delta Airlines, a December 19th expiration. Sell the 23 put, sell the 22 put, sell the 21 put, sell the 20 put, $6.24 credit, and I'm willing to own. Break even on that. So if I did 624, it'd be 86 divided by 4, 2150. And then I've got 624 divided by 4. So my break even would be $19.94. So if I'm assigned on any of these strikes, I do the math, pull in, you know, the break even's $20. I'd own it essentially at COVID lows and, you know, flip it. I'm not looking to hold it long term, but if I flipped it for, you know, a couple $1,000, I'd gladly do that. Honestly, this trade probably doesn't do the damage all the way down to $20. It might, but I doubt it. So anyway, selling some premium, picking my battles. All right, I got to go here in just a couple minutes. Any last requests? Gold selling off. There's a pretty hard pivot on the dollar. Gold is going to sell off. I said this is going to be a reversion trade. We're probably going to hit this 200 moving average. If this is the start of a topping pattern, it's okay. Like a topping pattern would be, let's say we come back down in here, we bounce back up for a retracement, and then we sell back off for a swing, find some support, and then gold still has long-term buying opportunities. Silver looking like crap right now, right? Silver's down a ton, copper's down a ton. We have wild stuff happening. Meanwhile, the market right around that 5,100 handle is responding nicely. It's up around 60 points off these lows. Powell coming in the next 15, 20 minutes. So the day is not done. There's still plenty of nonsense ahead. So just, I mean, as James says, don't get margin called. This seems like a pretty fitting time to say that. So, you know, I'm still sitting here with just over $1 million cash to play with. I turned red for the year, which sucks and I hate it. But I do have some good trades running. I'm selling premiums. I know they're going to be good income trades. And overall, I mean, I'm still going to ride these hedges out. I'm up 40 grand right now in hedges. Just on futures, I closed out for about $12,600 today on a push with XSP. So I'm just fighting the good fight, trying to take some profits along the way, sell some premium, take my mechanical trades, think my way through it. Don't do things silly. But yeah, we got some great, like, I mean, China's down pretty hard, right? Baidu was up to 92, now it's down to $80. So I mean, this is certainly going to get a little bit messier before it gets better. So, all right, everybody, I'll let you go for today. Thanks for tuning in, and you know, let's see what the next couple of days hold. I mean, like I said, over the weekend, this market has shown its vulnerability. So coming into Sunday, Monday, I will be watching the futures market on Sunday. If we have another giant flush lower on futures on Sunday night around 6 p.m. Eastern time, just buckle up for another ugly gap to the downside. At the same time, this market also might use it as an opportunity to buy the dip, because over the weekend, who knows, we have some miraculous negotiating that comes to the play or comes to the table. Maybe there's some Trump backpedaling where he's like, well, we're going to do this instead. There's some amendments or some exemptions or who knows. But I would say the message right now is it's trade war. It's a big threat. The global economy doesn't know how to price it in, so you can see everything's running for the exit door. And this is what it feels like. It's not the last time, but certainly for 2025, it's memorable. And watching the VIX, I mean, all I can do is kind of be strategic on, I'm willing to sell some premium, but I know this isn't the bottom. Like if this gets worse and worse, like we could have one more nasty spike into the 50s and 60s. This could go down. This could go down as like the highest spike in the VIX ever. Well, I'd like to be selling some premium and seeing this thing revert, you know? So I'm just not ready to dump all my capital and say, this is it. It's not, you know, I mean, technically speaking, I could still see the market going lower, right? We're in free fall mode. We've fallen about 15% in the S&P from the highs. We are down 16.57%. It's still technically a correction. Doesn't feel like it, but it's a correction. So my question is, are we in open space to offer up one little pullback, which this could be like a 2022 move or a 2020 move or a 2001 move, which is we have this huge dump and the market still jumps up like, you know, maybe 5, 6, 7%, and then flushes back down. So I don't think the lows are in, but we'll keep an eye on it. this did actually hit. This is, I mean, honestly, textbook wise, this is pretty crazy. It hit a fib level today, 51.17, almost to the point. So if we have a high, low, lower, high, lower, low, you take this new fib, look to see if the market's going to pull back into this gap. And then there's maybe one more flush lower coming. But we are not done yet. So, all right, everybody, I got to let you go. Thanks. Bye. Have a good weekend.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.